Oh boy. Good morning. Good morning. Market's getting a little bounce. Don't get too comfortable. Negative gamma still rules all around price action. Negative gamma. Okay, let's see. Nvidia's up. Nvidia's up. Amazon up pre-market, trying to get back above the 200-day with earnings tonight. We also have Apple tonight. AMD looks good. AMD, SK Hynix. The Kospi jumped quite a bit last night. Two stocks running the Korea index with all the other stocks. I think must be 200 or 300 companies held captive to two names, Samsung and SK Hynix. And of course, the US being impacted, especially with this negative gamma above and below price. Chips are bouncing though. I would take the it's just my own predicament, but I have too many chip related names, Intel, Nvidia, AMD, SK Hynix, etc. I need to reduce my risk. So any bounces where I'm positive on the positions, I'll probably reduce. Okay. All right. The markets are up. We're up 54 handles. All right. Amazon looking good. All right. We got about, 11 minutes to go? 11 minutes. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Thursday, July the 30th. I'll be out tomorrow traveling. I got to run to the bank at around noon as well, so I'll be out about a half an hour for lunch. I will be in the trading room though, posting levels and gamma information. So if you become reliant on those gamma maps, hedge flows, I'll be updating those. Post a gamma in the morning, etc. All right, PCE price index year over year, actual 3.7, forecast was for 3.7, previous was 4.1. So there's no change in the US PCE price index. All right. Got 8 minutes to go. I am going to maybe make some coffee. I haven't made coffee in like 2 weeks. All right, let me get some audio on here in the background. Hope everyone had a good evening. I had a weird dream last night. Woke up panicky. All right, let me go make coffee. I'll be right back.
Saying his confidence in Chair Hassett, but at the same time said that it's a difficult task because this is a Federal Reserve who is political. Director Hassett, who is political at the Fed? Would you view the 3 dissents as we saw in favor of a hike? Were those political votes by those FOMC members?
Well, I can't climb inside the heads of those folks, but as you know, before Kevin came into the Fed, many times even on this network, I talked about the sort of befuddling movements of the Fed. So Joe Biden's stimulating the economy like crazy, and the Fed saying it's transitory supply disruption. When obviously, I had interviews in May of that year where I said it looks like inflation is going to be around 7% because of the big chunk of demand that was being thrown into the economy by the Biden. So the Fed ignored that. They didn't really start tightening until Jay Powell was reappointed as Fed chair. And then they cut rates sharply right before the election in order to help Kamala Harris. When President Trump, in contrast, was elected, then even before he was inaugurated in the first term, the Fed started hiking rates in that December. And so that the patterns of their movements have been very, very suspicious. And so I don't want to speak to specific people, but those patterns are very suspicious. And I think that that's the kind of thing that's going to end now with Kevin Warren.
Director Hassett, I just have to push back against this. It's a Fed that cut rates since Trump's been in office. So I don't see how that is necessarily suspicious. I don't want to rehash the conversation we had last time, but that pattern's not there, as you say. Sure, they cut before Trump came into office, but it's a Fed that eased rates with Trump as president.
Look, the pattern I've described is not in dispute. And, I think that what's going to happen going forward is that the Fed will be responsive to the economic data and be independent, because Kevin is going to be there and he's going to manage the people who try not to be independent. And so I'm very, very bullish about the prospects of the Fed policy moving forward in the proper direction, the nonpartisan and independent direction.
I'm struck by how much we're talking about the Biden administration, looking back, and perhaps we'll look forward here in the minutes that we have left. There's a war going on in the Middle East. There's still war in Ukraine. We have an administration now for which you work that's imposed these new tariffs under Section 301. What do you say to American consumers who acknowledge the fact the inflation level is higher than the Fed's target and are worried that those two inflationary issues could make inflation more troublesome, more nettlesome, or even go higher here in the months ahead?
Well, I think that if you look at the positive prints we've had for CPI and PCE, you can see that energy is just a small part of the inflation story. So we've seen drug prices come down because of Trump RX. We've seen our deregulatory efforts lower prices for just about everything. We've seen the great work of Brooke Rollins and the Ag Department help food prices get under control. The only thing everybody was talking about when we first got here was egg prices. Egg prices are at an almost all-time low because we've done a much better job managing the avian flu than the previous administration. And so I think the price pressure is easing all around, and energy prices have for sure blipped up again for a while. But I think that if you look at futures markets, they expect that to recover relatively quickly, and that's our hope as well.
Well, why isn't that what we heard from Chair Warsh? She talked about that inflation still being an issue. They're committed to 2%, said that they're watching it. Kevin Warsh did. Director Hassett, it doesn't sound like a Federal Reserve or a chair that's on the same note as you are.
No, I disagree. I said things are heading in the right direction, and that's reassuring for the Fed. And I think that he's saying that he still has work to do, and saying you have work to do and things are heading in the right direction are not contrasts at all.
Kevin Hassett, let me pull an audible here. You wrote a book in 2002 called Bubbleology. And as you look at the AI sectors we've been doing over the course of the morning, are there warning signs that you see that we could be in bubble territory here?
The difference, I first know. And the difference between the dot-com boom of the 90s and what we're seeing now with AI is that the AI companies are actually making money. So remember back then we had insane valuations for firms that had yet to make any money at all. And so when you can wonder, well, are they ever going to make money? Pets.com, are they ever going to make money? It turns out the model of taking dog food to your house has worked pretty well for Amazon. But back then, the early firms that were doing that, they went out of business. And so it ended up being that there was enthusiasm about the internet, that in the long run was good enthusiasm, but it created a lot of failure, business failure. Here we've got like a few companies that have this remarkable investment that's increasing the productivity of firms all across the country, and they're charging their customers for the service in the terms of billions and billions of dollars. And so when you see real money and real success and real productivity growth and so on, then there's a rational explanation for why the increase in value is happening. Now, whether it goes too high or too low, that's something the market will figure out. But it's much harder to have a rational expectation for why things are going up when you don't see the money.
All right, Director Hassett, we really appreciate your time this morning, as we always do. Thank you for joining us.
There we are, Danny Burr, David Gurrow, with Kevin Hassett of Pennsylvania, of course, leading so much of the president's economists. a special edition of Bloomberg Surveillance, and we're well timed here. We got a question off our new subscribers from operation here. This is really good. What's even better, it's from Perry's Plate up in Andover, Mass. She emailed in with a question that leads directly in Anna Wong's fame. Of course, this is Bloomberg.com/AskRadio.
Okay, let's get ready. We got 1 minute, 30 seconds to go. 1 minute, 30 seconds.
Look, US has the best data.
I tell you what, this lapel mic is so much better. Audio quality is good, and it's not even a good mic.
Discussing the optimal methodology, the US delegation still.
Okay, we're back below the 200-day moving average. Amazon.
The real-time assessment with what's
AMD's on the move. AMD is rocking higher.
like, for example, productivity data. It's notorious that productivity gets revised significantly, so you cannot really trust quarter-to-quarter productivity data.
Right.
And you have to take a long trend. GDP as well. GDP could get really revised in 5 to 10 years.
And I want to get this in before the market opens. Folks, skills are going to be today. Some question about that. Analog last night stopped the economic world with a blistering LinkedIn essay. I put it out on LinkedIn.
Okay, let's get ready. There goes SK Hynix up quite a bit.
Marsh's rhetorical style.
SK Hynix up quite a bit. I might take SK Hynix off just so I'll have one less semiconductor to be concerned about. And that's open. That is the open. Thursday, July the 30th.
His mention of Lucas critique underpins why he is suspicious of the PCE measure. One reason why the bond market reacted the way they did was that they were like,
Okay, Amazon moving lower.
what is the inflation measure? He cares
Earnings tonight.
about PCE, then we're just going to do our thing. So the Lucas critique would say
Apple, immediately some selling on Apple this morning.
various they will adjust their behavior. So,
Microsoft up quite a bit.
and so I think Warsh thinks that there are
Okay, let's see how Microsoft does today. Might want to sell some call credits up there.
The 30-year bond, 5.20%. That's a new low. With a new opening in the market, Alexis Christoforous.
Thanks a lot, Tom. And we saw that rally sort of gain steam as we move closer to the open.
All right, let me see about some Microsoft calls.
Leverage up 320 points and the NASDAQ 100 up 548 points.
For next week, let's see. Microsoft 450s are 34 delta, 460s. Okay, I want to sell some call credits on Microsoft. 20 deltas, minimum 20 deltas. Microsoft. Okay, let me just check Microsoft again. All right, we're on the move. Microsoft looking good. Reminder, I'll be out tomorrow. I'll be in the room. I just won't be broadcasting live. Microsoft selling call spreads. Okay, I'm going to sell some 20 deltas out at least a week. Okay. Okay, let me look at Microsoft again. Microsoft. 460. August. Let's see, 7 August. 20 deltas are 470. I'm trying to sell at 18 delta, so that's the 470 strike.
Employment and full employment.
All right, 470, 475 call, sold credits. August 07 DTE. Okay, Microsoft looking good.
In fact, inflation was not slayed as most people believe that in fact, authors did not slay inflation. And the underpinning technique to that led into that conclusion is the Lucas technique. You think that the Phillips curve has been moving over time, so you can simply run a scatter plot between the past inflation levels versus
Okay, we're on the move here.
taking on that reaction function as they think about what the trade-off between unemployment and inflation.
Okay, nice move on Microsoft.
This adaptive Phillips curve based on what Lucas read into who figured we found that in fact inflation, high inflation, could come back again. So it is not due to a good monetary policy that inflation went away, which is from a idiosyncratic.
All right, so Microsoft doing pretty well here. I'll sell a few more as we cruise a bit higher. I do have some call spreads that we've been sitting on for got to be a couple of months now that are starting to look a lot better. I'll take those off into strength. I want to reduce my exposure in SK Hynix. I might not do it today. I might do it tomorrow if it keeps moving here. Okay, Microsoft.
In a very, very logical manner, there will be case for what he's doing and for holding rates constant. We need to enhance the bond market results.
Tesla on the move.
I think he did kind of, but whether
Okay, SoFi is up today. SoFi. That one got whacked on earnings yesterday. I have 2028 calls, so not really that worried about SoFi. All right, Microsoft just sold some credit spreads up here at the high of the day. If I make 50% on them today, I'll take them off.
they certainly don't know that. Yeah, and in fact, if you look at the commentary.
Okay, test. Everything's bounced a bit, but starting to show some weakness.
Got really to raise in September. and
Apple with earnings tonight, Amazon with earnings.
baking in,
Amazon tonight, Amazon, Apple earnings tonight.
because our forecast.
Meta earnings out of the way. I would like to sell some Meta. Let's see what Meta looks like.
Fullness to the core. And in September 30th.
Okay, there's a double bottom here on Meta.
Visions on PCE inflation.
Double bottom.
PCE down by 2%.
Is Meta going to go out of business?
So with the long yield blowing out, economic activity was slow. GDP already disappointed.
Okay.
to the negative side today. I think we are going to see more of these negative disappointment in the next.
Okay, I think we're going to probably see a bounce on one of these, maybe Meta. Maybe some Meta put credits while IB is still high.
Very incredible that he said he hasn't really decided what he wants to say, because usually it's a very drawn out and fuddy-duddy process.
Okay, let's take a look at hedge flows.
Speech.
Okay, we got a lot of negative gamma to deal with.
Face value. I think that he's not ready. It is because the speech is contingent on a task force finding. And that's why it's not ready. So I'm suspecting it'll be a lot about task force and some early findings.
Okay, 7,400's major resistance. Microsoft's still looking good here.
I look at this out of Chicago, out of Frank Knight, the revolution of the freedom of Randy Trust and all did was still.
Okay, SK Hynix still climbing. I do want to take some SK Hynix off. Cerebras also bounce, right? CBRS. Not as much as I had hoped. SpaceX.
Rather than hype yesterday.
Wow, a lot of doom and gloom over the SpaceX listing.
I think in policy making.
Interesting video.
Temptation to focus on the optics, but at the end of the day, I do believe that economics is what matters.
I listen to these people on Bloomberg, and like, if you're not paying attention, you're not looking at them, looking at their faces, it's very interesting how little what they're talking about has any, I don't know, doesn't really apply to the markets. In the short term, maybe the long term, some of these things people are saying make sense. You might be rolling your eyes right now, but just so much noise. So much noise. It's all about earnings and lately about CapEx. If you're spending way too much on CapEx like Meta, you're going to suffer. Microsoft, imagine they reported a bit too. All right, so those call credits I sold up here at the high. If I make 50% on these, okay. Sold 08, 07. 470, 475. Call credits.
Today, the stock is down 17%, lower than expected due to marketing spend for the Football World Cup. Also, all eyes on Apple and Amazon out with earnings after the closing. That's your Bloomberg Business Flash.
I'd like to say so much. You have those 3.7 standard deviations.
Okay, Microsoft looking really strong. I do have call spreads. I'm looking to make some money on too. The call credits. Call credits were nice. Was about $80. What do those sell for? Those sold for $75. $75 per contract. I hope we do get the 470. I can always roll these up, but I hope we do get a bit higher. I have some 440, 450s. I took those off this morning. We're at max profit. 440, 450s. Also have some 465, 470s. Microsoft 465, 470s. Those expire on the 21st of August. So we'll see if we get anything out of those. Tesla turning up. Tesla. Okay, we're above the pre-market high. Looking for above average volume on a push higher on Tesla.
But yesterday's news and then today and just the earnings that have been reported and that we expect, it really just is a continuation.
Citi, JP Morgan, the banks got whacked yesterday. JP Morgan. I took the put credits I had on JP Morgan. I took those off yesterday or the day before yesterday. On Tuesday, took those off near the highs. We got that doji at the highs, so I decided to take those calls off or the puts off. And I mean, they're down here at 315, so I don't think we're going to see that level again anytime soon. JP Morgan, I had the 315, 310, 315, 310 put credits. I took them off on Tuesday. Yesterday we dropped. I could have gotten back into these actually. But because I'm traveling tomorrow, I'm going to wait until Monday to do anything else. I did sell some Microsoft. Microsoft is up quite a bit this morning. So I sold some Microsoft on that pop. Looking for a fade. I sold the 470, 475 for next week. Okay, let me just mark that down. Okay, I sold the 470. And I bought the 475.
Instead, we are more drawn to the industrial.
And that's at 18 delta. 18 deltas. 470, 475 call credit.
And then we also like some areas of media and services. We think that
All right.
Capital call Microsoft up zillion points, like a 14%. Apple, I think Paul, it's an opportunity.
That's a lot. $60. Its ATR is about 15. Looking for a fade. Haven't been selling a lot of credits lately, especially Iron Condor's earnings. I got hit a couple of times, had to take a loss. Microsoft was a big one, actually. It was a couple of quarters ago. That was like a $5,000 loss. In the bigger scheme of things, it wasn't that big a deal, but for some people, I'm sure that was a unexpected predicament to deal with. I wound up buying puts as well. That was 2 quarters ago, I believe. So Microsoft, let me just let me post this here.
Standing up last night, and I think everybody knows what's going to be it.
Let's get to it. He's been a saint to this news flow. Get our news. New York City is Michael Barnes.
Paul Alexis, thank you very much. You
US and Iran have fired barrages of missiles as hope dim for any quick resolution. US military dozens of Iranian targets, including military command centers. Meanwhile,
Oklo, OKLU. Okay, let's take a look. OKLU. What? There's no OKLU? Okay. OKLL. LL. Let's go 60-minute. It's looking pretty good. 276, 296, 306. 276, 296, 306. Let's see. Okay. See you. Okay. See you. Do we have that? ORCU. ORCU. Orca. ORCU. Oracle Bull. All right. Oracle looking pretty good, right? 627. 582. 627. Whoops. 582. $627. 685. Okay, Oracle. I already have ORCX. 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 Nice turn here. Oracle. Okay, let's see what the volume looks like. Okay. ORCX. ORCU. ORCL. Okay, Oracle. Can we get a final change in direction on Oracle and start to appreciate a little bit more? Okay. Looks good. Oracle. Long-term investors, think about it. Netflix is down a little bit today. Okay, nice move on Microsoft, sitting here, eating away at Theta. Coffee's good. I haven't had coffee in 2 weeks. SoFi. Okay, let's see what SoFi looks like. This is Oracle. Okay, Oracle, you can see this is changing trends. Okay, Oracle got anything going on? Oracle, all right, Tesla in the toilet, but could be turning, could be basing most likely, right? Okay. Oracle, Google expand partnership to put Gemini in enterprise applications. Oracle looking good. Oracle, longer term, this looks good. Maybe by next year, this will be much higher. Let's see. Okay, Oracle looking pretty good here. Nice little rally. Okay, not a bad day so far. Broadcom, all the chips are up. Chips looking good. All right, that looks good. I really want to take some SK Hynix off. Need it to be a bit higher. I'm going to wait till 150, so that might happen tomorrow or Monday. don't want to look a gift horse in the mouth, as the saying goes. I wonder where that comes from.
But I think we also argue that given what's going on with the price, potentially.
Microsoft. Okay, just sitting here. Microsoft. Oracle looking really good. Oracle's looking really good. I love these lavalier lapel mics. This thing is like really good. There's 2 of them in a pack. I bought another pack so that I have about 48 hours of recording time, broadcasting time. The batteries last about 7 hours, I guess. So 28, 30 hours, about 30 hours worth of recording time, broadcasting time. Anyway, I had this really weird dream last night as we're watching Oracle. Had to do with the police. Bizarre dream. There goes NVIDIA. NVIDIA's on the move. Watch NVIDIA. Chips are hot. Chips are hot.
Right now, it's inflation. And given the legacy of 5 years of swinging and missing, putting the inflation target, I think that has to be considered. Not some,
NVIDIA popping now. ABGO going. Let's see. AMD was looking good too. AMD, SK Hynix, AMD. What's Micron doing? Micron. Okay, SOXL. AMD. Geez. SKHY. Micron. What about SNDK? Okay, SNXX. Wow, chips look good. All right, I might take some NVIDIA. Oops. I might actually take some NVIDIA off. What the hell did I just do? Okay, what the hell is all that? Singing. Hate singing. People, happy people are just talking to my son about being a grumpy old man. He didn't even hesitate. Yeah, Papa, you need to chill. So I'm taking some good things from my son, you know. Always good to take a look at what you were like when you were his age, right? 16 years old, had the world by the tail. Okay, and everything looks good.
94 points to the upside. That's 1.25%. But probably more important, NASDAQ 100 as momentum names really starting to bounce back today. 3% higher, 800 and some points to the upside, eclipsing 28,000 once again. Russell 2000.
SOXL. Okay, I have some SOXL, right? SOXL. Nice bounce. I think I have at least September SOXL. Let me see what I have here. SoFi is fine.
Easily the story of the morning early in the trade. Let's talk some futures products as well. Post-Fed yesterday.
January. All right, January calls on SOXL. I got 150s. Andrew, by the way, I got your DM yesterday. Yeah, the S&P bought those for 17. Only had 2 of them to start. Walked out of the room. The markets, I think it was gone like maybe 15 minutes. It came back. The markets had dipped and turned back up. Usually I would take those off flat to maybe down a couple of bucks. Those dropped quite a bit and then rallied like crazy to 49 by the end of the day. or, you know, 2 or 3 o'clock, whatever time it was. S&P 500. What time did it rally to? Yesterday, right there. Okay, so it dipped pretty good in the morning, and then wound up rallying after 1 o'clock, peaking after the Fed and dropping. Okay, we're almost back to where we were. Okay, let's look at Nvidia. Yeah, I would normally have been out of that. So less about cojones and more about not being in front of the screen. That was pure luck. That was pure luck.
I mean, they posted good numbers across the board in all segments, which includes, of course, their intelligent cloud, up 32%, other cloud services, Azure, up 40%, productivity business.
Okay, CBRS, another chip. CBRS catching a bid. Okay, so this is building a base down here, obviously. This is a long-term investment. Cerebras. At some point, this is going to move out of this IPO base. Nice price action.
And I think that's one of the reasons why it's being rewarded today. Unlike Google, which did increase.
Rocket Labs. Let's see what Rocket Labs looks like. RKLB, Rocket Labs. Looked good on Tuesday, dropped yesterday. It's still trending lower, so no follow through there on Rocket Labs. Let's see, that's starting to fade already. Rocket Labs. Let's see, Discord. Why is this not playing?
For Azure as well, they can tell the story to the street right now. So they're not the most reckless with spending. Their cash flow is still very, very positive.
Okay. Pulse alerts. SNDK, no surprise there. SNDK with some call side buying on SNDK. SMH Pulse. Actually, puts are leading on puts are leading on SMH at the moment. SOXL. We got calls leading by 100%. SOXL. Okay, got the 150s. Those are out of the money. SK Hynix. SK Hynix, I want to take some of this off. Let's see, SK Hynix. All right, so that's not looking too bad. I got March 2027 calls on SK Hynix. March 2027. Okay, SK Hynix. Trading at a substantial premium, about 40% of the US ADR pricing compared to the underlying South Korea shares, raising questions about arbitrage. You've seen the volatility, so I don't have to talk about that. Massive year-over-year revenue and profit. So I have March 2027 calls on SK Hynix. I'll probably just hold on to these. Get closer to the actual shares that are trading in South Korea, closer to parity. Okay, so SK Hynix, watching that. SOXL turning back down now. Okay, Rocket Labs, I took those off for a small loss. I had September calls, they're not working, so I took them off. Okay, this could bounce, of course. I bought calls that were at the 80 strike. I was looking for a follow through earlier in the week. Actually, last week we were looking for Rocket Labs to move back up. So these weren't too far out of the money at the time. It was like a 40 delta. But this keeps sliding, so I don't want to give away too much. So I took those off. Small loss, about 20 bucks per contract, $25 per contract. At some point this will turn back up, I guess. Palantir, what's Palantir doing? Palantir is flat in the moment. Let's see the stocks that are actually moving the markets right now. We're watching Oracle, of course. Oracle turning the corner. Okay, watching Oracle. S&P is starting to fade now. S&P is starting to fade. Watch the hedge flows. We hit the 7,400 level, got above it. Okay, we're still up 75 handles. Can we make 100 handles out of this day? Negative gamma works in both ways. All right, so you can get volatility on the upside move and on the downside move. So you can see purple overhead. Purple overhead is starting to show up, which is telling you that there's resistance overhead. The purple is resistance and support, while we're capturing this range in between where prices move substantially in either direction. So as we approach 7,500, if we can get there, that would be awesome. That would be an awesome move from here. That would be over 100 points. Can we get some lottos? If I was going to be here tomorrow, I'd probably go ahead and do that. Microsoft's starting to turn down. Okay, I sold some Microsoft call credits over here. Sold call credits. Okay, it's about 5 times the ATR. Looking for Microsoft to pull back in a little bit. If I can make 50% on these calls, I'll take them off. That's going to be about 35, 40 bucks per contract. I sold 10 of those, so be nice. All right, Tesla fading a little bit at the moment. Tesla. This is Microsoft. Microsoft. Okay, the chips. Amazon still pushing here. I'd like to sell some call credits on Amazon. Let me see what Amazon looks like. Amazon. AMZN. Amazon. Okay, back above the 200 day. I do have Amazon, right? Okay. No, I don't. I sold it? Huh. I thought I had Amazon. I guess not. All right, so I'm thinking about call credits. I'm thinking about selling call credits overhead. Amazon. Let's take a look at Amazon. Okay, Amazon is over here. Selling call spreads. Let's see what Oracle looks like. I'm going to put Oracle on here. Oracle. ORCL. Oracle. Oracle. Really? IV rank is pretty mild at 56%. IV rank, I like IV rank to be up around 75, 80%. To take a trade, let's see. Blah, 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 blah. Microsoft, there we are. Okay, you see the difference? Microsoft, IV rank, Microsoft IV rank. Is 90%. And it's like 5 times its ATR up here. Okay. All right, so Microsoft just sitting here. All right, looks good. All right, markets is settling down, watching the S&P. If you're trying to get my attention, I'll start checking the room now. It was a pretty active morning there. All the chips were on the move, so I took a few things off. I reduced my exposure in NVIDIA. I decided to keep holding on to SK Hynix because I have March calls for next year, and that's continuing higher. That looks good. Okay, watching hedge flows starting to turn back up. Let's see what the markets can manage. We're holding up fairly well. Here goes NVIDIA. NVIDIA's starting to move. NVIDIA looking good. I have NVIDIA calls I'd like to unload at the 200 strike. Let's see. I took some of those off already. Let me see what else I have here. NVIDIA, September. I have the 205 210s as well. I sold the August 200 205s. I had August 200s 205s. I took those off right here. Okay, on that volume spike. Okay, so we're above the pre-market high, the purple line, and we're above the opening range high. If we get some volume here, we could see a little blast to the upside. Chips are pretty hot. We're at the 200-day moving average looking for a bounce. Okay, I'd like to get about $100 to $150 per contract at minimum on the September 205 210s. We could probably see that maybe $200 per contract profit if NVIDIA continues here. Dollar, are you in this already? I believe you already are. I think I saw you post something about NVIDIA a few minutes ago. Nice. Okay. Yeah, dollar, it's green too, right? Okay. So maybe we can dip a little bit more on the 10-year yield. That would help chips. That would help tech. That would help small caps. Intel still climbing. Intel. Intel. I do have calls on Intel. Those are out in September. I'd like to see a little bit more appreciation here. Selling put spreads, rather. Okay, put spreads on Intel look like a good idea. Nvidia starting to fade a little bit. Okay, Nvidia looking for more upside. Nvidia. Let's see what Microsoft is doing. Microsoft. Okay, market's kind of stalling here. She sounds like she inhaled some helium.
Negotiators, though he didn't give us any further information beyond that, and that those talks are focused on.
I swear, it sounds like she inhaled in helium. Okay, S&P is turning up here. Watch, we might get a rally. Nvidia looking good. Cool.
Tyler, are there any scheduled negotiations that we should be aware of, or is there really nothing happening at the peace table at the moment?
Noise. Everything is noise. S&P's on the move here. S&P breaking out above opening range high. S&P above the opening range high.
Wrap things here. Final thought, one of the big trends of the last quarter really going.
Okay, can we get 100 out of this? 7,500 is a target.
You start to see the divergence between, I guess, if you want to frame it as the companies that are writing the checks and the companies that are cashing those checks. Now, that has started to come back a little little bit, just given the
Okay, just for the record, 7,500 is the next level.
Is there a world in your mind, in the near term where these
Is it possible to get there? Can we get there? I guess.
Signs of it's actually continue to go negative, so I'm not so sure that they need moving as a cohort, together anymore. But to the extent that they can move together in the momentum trade, then yes, I think some of them can move together. But I think you bring up a good point about bounce back. If you're sort of feeling it today, sometimes you get these really aggressive reversals, and that can sort of give the illusion that the index is recovering more. So it certainly sort of paints that story more of concentration and how a few names are sort of tracking the index higher. So I think you do need to be sort of on watch for that dynamic.
Okay. Looking pretty good here, folks. Is it possible to get there? Possible. Probable? Maybe not. What is that? What is it? Non-zero day, that's 99 percentile.
So to some extent, it's a little bit of a rinse repeat, especially when you add in some of the fears about Chinese pop AI models.
Okay, so you got 7,500 up here. Is it possible? Wow, that would be awesome. Crush the bears. Bears are having to cover. SK Hynix going vertical.
Schwab Center for Financial Research. Coming up, it's time for the morning trade. We're taking a closer look at the other name of the mega cap world today. That's Meta. Talk about why shares are down after earnings and get an example trade as well. Trade live. Right back.
Stay connected to what download the Schwab Network app. Stream live coverage.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education and expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time.
Have you ever watched an interview and thought,
Okay, S&P.
that's exactly where market matters comes in. I'm Harley Hayden, and our podcast is we're going beyond the earnings to get to the heart of the people and companies driving the global economy. If you want the full story, not just the headlines, market matters is for you. Subscribe wherever you get your podcast. While others recap the news, I help you read between the lines from what's moving markets to what's next with sharp takes and market. Follow me on all social media platforms at Diane Hall and connect with me on LinkedIn.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Schwab Network delivers real-time market insights live from the NYSE, NASDAQ, SIBO, and beyond. From earnings to economic data, we cover what matters as it happens. For 24/7 anytime, on SchwabNetwork.com.
Nvidia still pushing. Amazon still pushing. Apple not working. Apple.
Question marks, we'll say, for those
Okay, I did sell Apple apparently yesterday or day before.
market cap. This is a big, big move. I think every dollar is around 2.5 billion. So we're talking well into the 100 billion mark in terms of market cap you raised in this one-day move here in real time. 9.3% to the downside is it's not much off its spike lows after the report. But joining me here in studio is my co-host from Next Gen, Jenny Horn, to break down maybe what didn't go well. I was going to say what went wrong, but let's just say what didn't go well.
Yeah, because I will say that unfortunately it was a very clear, I think, signs of what didn't go well. And that was, I mean, you have a pretty substantial headline earnings miss. And that I think is pretty much the biggest takeaway that we've seen that has really just continued to resonate. And like what right now they're further spend and obviously push into AI, how it's impacting in real time their profitability, which is, I mean, we're seeing play out. Revenue though, I mean, to start things off on maybe we'll put it.
Nvidia's still pushing. I got Nvidia calls. The 200, 205s. I took those off this morning. Also have 205, 210s for September. Nvidia. I sold the 200, 205s right there. Still have calls looking for more support here. I was kind of surprised at the weakness yesterday because there were some big trades that came in on Tuesday. Monday, Tuesday. I believe there were some big trades that came in. So we were anticipating that we could see a bounce at the 200-day hold. Previous level, double bottom. Still expecting this to move back up to the center of the Bollinger Bands at a minimum. That dotted red line, orange line. That's the middle of the Bollinger Bands, 203.10. So 203.10 would be a good profit on those 205, 210s. If we can do it this today, tomorrow. SK Hynix at the highs, low profit taking, SK Hynix.
Revenue guidance also disappointed just relative to expectations. And even though, I mean, like from reading all of the analyst takeaways, it's actually still fairly optimistic. It is right now an acknowledgement of like how AI and the expense of it is playing out into your business model in real time. And we discussed the same thing with Alphabet last week. Now starting to see these numbers now reflective exactly of the more bearish concerns.
Yeah, and I think a big thing too is, I mean, this is a very different company. I think it's the example, Tesla. Okay, we talked about Tesla. They had the really strong fourth numbers of the earnings to be able to see. The way I think about Tesla is the core business is it funds everything. The same thing can be said for Meta. The street's going to be following with some of that investment. Business doesn't flip.
All right, S&P 500 up 88 handles, over 1%. NASDAQ is up 2.5%. Nvidia starting to put in a higher high, looking for a higher low now. Okay, let's look at some of these opening range breakouts. Let's see. NBIS. Okay, we're looking for volume signals, LRCX. They'll show up as ORB alerts. CoreWeave, CRWV. This was active on Tuesday. It dropped yesterday. Reversal today. CoreWeave. They have earnings coming up. CoreWeave. Western Digital, WDC. All these bouncing. Double bottom on Western Digital. We had Seagate yesterday. Big gap up today. Seagate. Micron. I don't know. It looks pretty good for Micron, right? In this area. Micron, somewhere in this area. Starting to build a base. Maybe a cup forms. There's no need to buy anything right now. If it builds a cup, if Micron builds a cup, it'll look more like this. So there's no hurry to buy here. This could still move lower, okay? If it moves higher and we see, price action continue, you can buy over here once it gets above the 50-day moving average. Maybe the 50-day turns up instead. 50-day continues to turn up like that. All right, just watching for that to happen. Watch for a cup pattern on Micron. It's looking pretty good.
A purchase price, effectively, my basis will be about $500 a share for Minnesota.
Micron. Nvidia pulling back in a little bit. What's Microsoft doing? Microsoft's still hanging out at the high.
It's going to stay. So the semiconductor is getting a big vote of confidence today that the AI rally is on and staying here. So for me, if that's the case, I would want to nibble at a company like Meta that has come down so far so quickly. Well, speaking of the big picture, and my last guest, Kevin Gordon, talked about it, and I love the visuals. He describes it as a duck market. It looks calm on
You could sell.
but a tremendous amount of churn underneath.
You could sell
The volatility is tremendous.
some 20, maybe 25 deltas on Microsoft and make about $100, $110 per contract for next week. It's a little late now because the IB is dropping off so much. Let me see what Microsoft looks like now. Microsoft. Some pretty decent size offers, 24,000 shares, 332,000 shares. I'm looking at level 2, 20,000, 20,000, 25,000, 28,000 on the offer. Whoa, that was 270,000 just now. Hit the tape. On the sell side, offer. Maybe they took the offer. I didn't catch it. 450. Okay, let's go see what Microsoft actually said. Microsoft. Okay, 29%, 30% earnings growth, 17%, 18% revenue growth. We are advancing the frontier on the cost to outcome curve, ensuring every customer can turn tokens into business results. That's from Satya Nadella. This year, Azure revenue surpassed 100 billion for the first time, and Microsoft's 365 Copilot reached 30 million paid seats, reflecting the confidence customers are placing in us to power their AI transformation. Okay, the company expects quarterly earnings of 463 to 478 per share. In the next quarter, 89 to 91 billion basically. This time around they reported 474, so that's about a 30-cent beat, right? 50-cent beat if you look at the consensus estimate. Earnings Whisper was 434. They reported 474, so that looks pretty good. I think it's a bit overdone today. Maybe it pushes a bit higher. We'll see. They reported 474. Next time they're expecting about the same, so they're about expecting earnings to be about flat. Now they could be sandbagging. Steve Jobs was notorious for sandbagging. He would say, under promise and over deliver. Remember those days? If you've ever traded Apple when Steve Jobs was still around, we would trade earnings. He would always under promise and over deliver. Those were the good old days. It's too bad the guy's gone. I'm sure he was a prick to work for, according to certain people. I mean, he took all the credit. He came up with the ideas and all of his engineers did the work, kind of like Elon in a lot of ways, right? Okay, so historical volatility, we got implied volatility is dropping to 34%. IB rank dropped. What was IB rank before? Microsoft. Okay, Microsoft. Okay, IB rank was 90.73 at the close yesterday. Right now, IB rank has dropped 40%, 40 basis points. It's down to 52. It's down to 52, say 50%. Implied volatility is down to 34%. Okay, so IB is dropping as well. So that IB crush is what I'm mostly interested in, selling premium. Microsoft. Okay, I'm still in reduced risk mode. All this negative gamma means prices can fluctuate in both directions very rapidly. So as we ease up into the white zone here, we start to leave that high volatility area and start to move into the slower area, which is the purple. Okay, into the 7,500. I don't think we're going to get to 7,500, but that's where the biggest net open interest is. Biggest net open interest for 0-day, which is kind of weird when you call it net open interest. I guess that calculates from yesterday. What's left over is at 74.35. That's a 96 percentile. Makes sense?
Sticky, but it's above the Fed's target. Yet, I think the investors are taking this statement pretty well today.
Yeah, well said. We'll leave it there, Jeff Pierce. Appreciate it as always. Thanks for joining us, Jeff, of course, Senior Manager of Derivatives Trading for Charles Schwab & Co. Coming up next, it is time for Inside Out. We're going to take a closer look at Rivian ahead of its earnings release later on this afternoon. That's all. We're live.
Market moves. Schwab is here to help you with it. So, whether you're buying, selling, holding.
All right. Intel's starting to taper off at the high. Microsoft at highs. S&P is pulling back a bit. S&P back to 7,400. Opening range high. We're stuck right there. Let's see what IWM looks like. IWM. QQQ. Okay, we got 80, 85, 90 handles that were up there. Are we going to fade? We're holding up fairly well right now. The Qs are sitting right on top of the opening range high. 50-day is way overhead. Just based on what's happened recently, we could fade pretty quickly, so be aware of it. Google, I wanted to sell some more Google put credits.
Tesla attempts to bounce back a bit here today. $8. We got BYD, which has become, in many ways, the standard of scaling this business.
Let's see what Google looks like. Google.
This afternoon. Let's go inside out. Space is now Henry Green, senior investment strategist.
Tesla. Call spreads on Tesla. Buying call spreads on Tesla. Buying call spreads on Google. On dip. Nvidia with earnings. Nvidia, it's got earnings in August, the end of August, right? Was it Nvidia earnings? August, the last week of August, something like that. Nvidia. August 26th, confirmed. Wednesday, August 26th, NVIDIA. NVIDIA. Selling put spreads on NVIDIA. Selling put spreads on NVIDIA, taking that money and buying call spreads. IV rank is starting to climb at 67%. Intel looks like it's going to go again higher low on Intel. Intel selling put credits made sense this morning. Is it on here? No, it's not on here, right? Intel selling put spreads. Intel looks good. I have to take about a 30-minute break to go pick up a car that I'm going to use. I'm renting a car to go down to visit with my mom instead of taking my car and putting miles on it. And I got to go by the bank. So it'll be about 30, 45 minutes. I'll be out. I got to leave here around 11:30 or so. I'll be out tomorrow. Don't take too many Fridays off since 2016, 2017. Hope you're having a good day. I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is Thursday, July the 30th. We're just shy of 11 a.m. on the East Coast. Here's Google watching Microsoft after earnings. IB, implied volatility dropping. Intel.
Curious what your thoughts are on this, how I sort of looked at Tesla as of late, given the big plans and all the ideas that it's I almost looked at it as like, hey, you have a couple steps you gotta pass or tests you gotta pass. The first one is well, the core business is funding. So if the EV business starts to slip, it's gonna be really difficult to really execute on the other plans. So you think that's a fair way to start to think about these things in more of a simple way where it's like, hey, first pass the EV test. If you do, then we can start looking at how are you growing the rest.
All right, Microsoft's starting to fade. S&P is starting to fade.
Yeah, I think that makes sense, right? I think Tesla is very much like has passed the EV test. They've seen very strong adoption globally, including in China, right, which is the world's largest EV market, which is why we're overweight that continue to be in the cars, ETF, KARS. And so, right, so Tesla's done, I think, the best, right? They were the leader, they were the first in the EV space, first pure play EV. They've done very well so far. And so to make this pivot, yeah, I think that, you know, they need profits, they need money to be able to spend on making this pivot into robotics. But remember, you know, Elon Musk is a bit of a wild card, and he is able to get funding from different sources, especially when you see, you know, there's going to be more demand potentially driven by policy for robotics that are made here in the States. Most of them are made in China. So Tesla could potentially benefit from that if, again, they actually start rolling out robotics, they say they will. And, you know, they could also, you could also think about maybe a spin-off or people have talked about the potential for a combination of Tesla with SpaceX, right? Those are two very different businesses, but they are related. They're in the Elon Musk kind of ecosystem.
All right, I'm going to take a 2-minute break. I'll be right back.
Tesla, compared to others, Tesla's down more on the year than Rivian, right? But it still has a relatively high PE, 60 times. Yeah, so it's definitely an open question as to how they're going to fund this shift. Although as we've seen in China, right, you can actually convert a lot of assets, manufacturing assets that are making electric vehicles into making things like humanoid robotics. We've seen that being done in China today. And so Tesla could follow that route. And given that they have one of the largest manufacturing infrastructure in the United States, they have some of the most EV infrastructure, that can help them shift somewhat in humanoid robotics without an extreme need for a big capital investment to do so.
Said. Henry Green, we'll leave it there. Appreciate it. Henry
Thank
is
you.
the senior investment strategist at Crane Shares. Tom White's with us as well, host of Fast Market. Tom, you're looking at Tesla.
Yeah, you can take a directional bias. I mean, this stock is the most oversold that it's been, even with this pop today, since March of 2025. So you look at the RSI at the technical basis, it was under the 30 level, which is considered oversold on a technical basis for the last few days here as the stock has slumped post earnings. So that's the way that I looked at it. You can take a directional bias, but you don't have to be aggressive about it, right? You can be wrong and still be potentially profitable in Tesla. So I looked at the August monthly option. So about 22 days to expiration. I'm just going to sell a neutral to bullish short put vertical here, Alex, to take that, exposure to the upside, right? While still giving myself a cushion to the downside. Selling the August 295 strike put, and then against it, because we want to stay risk defined, anything can happen, buy the 275 strike put. So a short $20 wide, neutral to bullish put vertical. You're collecting roughly a credit of $5.50 on that. So that's what you can make, $550 with about $1,450 in risk, right? You got more risk than reward, but your break even on this one goes down to $289.50 to the downside. That's about 5.5% below the current share price. So you're giving yourself that cushion. The probability that that short 295 strike put that you're selling in this strategy is out of the money at expiration, about 62%. So you've got better probabilities of success, but neutral to bullish, staying risk defined if you think that maybe the stock consolidates, maybe it goes higher, or Alex, maybe it even goes a little bit lower but stays above that break even.
Yeah, what do you make of the morning real quick, Tom, before I let you go? Is it momentum strikes back, or I guess if you're bull, return of the momentum today?
Yeah, maybe. What losses yesterday post-Fed? Because you look at the NASDAQ 100, that was up over 3%, wiped out those 2% losses that we saw yesterday. So, yeah, this is a momentum trade. Be careful in this, especially ahead of Apple and Amazon earnings after the close.
Yeah, starting to slip just a bit here. We're off the highs, so we'll see where things stabilize. But that's going to do it for us here on Morning Trade Live. Thanks as always for tuning in. I'm Alex Coffey for Sam Vadas. Coming up next, we got Trading 360 with Marley Caden. Stick around.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy. From the opening bell to the closing bell, we've got you covered. Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute. With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand. Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com. Morning. We're 90 minutes into the trading day. Welcome to Trading 360. I'm Marley Caton, coming to you live from our Chicago headquarters. Here's what we have coming up for you on today's show. For our 360 Spotlight, we'll be joined by AT&T's Head of Investor Relations to break down the telecom giant's second quarter earnings. The disruptor today is Fortinet, as the cybersecurity provider jumps following strong earnings and guidance. Then in our 360 round, we're going to bring in our panel to discuss the earnings we got from Meta, as shares are slumping following that earnings missed and a raised CapEx guidance number. Let's take a look at how markets are faring as we're into the trading day. Now we've got green across the board here. Nice change from yesterday. We are up almost 0.9% in the S&P this morning, 73.7866. On the Nasdaq, we're 2.5% higher, 27,885.94. For the Dow, 0.25% higher on the day. We're at 51,739.81, and the Russell 2K is up 0.3% at 2914.99. As we take a look here at some of our futures products, though, checking in with the 10-year, we are at 468. That is ticking higher. We're up 1.25% here. The dollar is at 100 even. Gold is at 41.5870. That is up higher on the session as well. Crude oil at 84.34. That is down ever so slightly. And as we look at Bitcoin, still in that same range, a little higher than yesterday, but we're in that 60 to 65,000 range right now, holding just below 65,000 at 64,600. I do want to welcome Nicole Petalides into the conversation and take a look at one of the names that is seeing a really nice move to the upside, albeit not as nice a move as we saw in after hours and in reaction to these numbers. We're talking about Starbucks this morning, Nicole. Alex Coffey and I covered these as the earnings report came out yesterday on Market on Close, and Alex said this is about as clean a report as you can get. So a nice move to the upside. I'm surprised it's not bigger, but take us through the numbers from Starbucks and what there was to like here.
Yeah, when you look at the numbers, you saw it being on the top and bottom line. Ron Nichols was brought over from Chipotle to really turn this company around. It's pretty evident he's doing exactly that. He has a back to Starbucks plan. This is the fourth straight quarter in a row of same-store sales growth. And there's lots of little intricacies that I'm going to tell you about here. First, I'll just start with the numbers. The beat on the top and bottom line, 85 cents came in to the 66 expected at 9.32 billion for revenue versus 9.16 billion. They raised the outlook. The earnings are looking 255 to 265. That's even at the higher end of the range, because the prior was 225 to 245. The global sales outlook also, they expect that to be up above 6%, the total above 5%. So the idea here with raising the outlook and seeing the global sales growth that they did of nearly 8%, North America was over 8%, international was 5.7%, are a few of the things that they've been doing to make this turnaround plan really work, including right here saying cafe renovations, menu improvements, marketing, investing in labor so that your customer experience is just a better one overall. They also talked about the human interaction and things that are doing very well for the company. Some of the innovations, such as the crisp refresher energy drinks that basically is now a $2 billion business. They want people to really love the brand again, and they said the brand image is in fact among the customers. They said that overall transactions were up 4.5%, and also the average check was up 3.5%. I'm sorry, the traffic was up 4.5%. The transactions were up, and the average check was up 3.5%. And as they go forward and continue to open more Starbucks, they also just noted that the afternoon is sort of the untapped area where they have seen $11 billion in sales, but maybe you'll see.
All right, nice little pop, nice little drop in Microsoft. Let me see what I can buy these back for. I want at least 50%. Microsoft. Okay, I'll give it a little bit more time.
Just to see how quickly this.
All right, Meta's on the move here. Meta's starting to move back up. Thinking about selling put credits on Meta.
Process is Starbucks is at least showing us now. Really appreciate you breaking that down for us here. As people said, Starbucks up more than 2% this morning. Doing a run that conversation, though, welcome in Tony Zhang, chief strategist over at Options Play. Tony, great to have you back on the show. Got a nice day, green across all four of our major averages here. Although we did get some economic growth figures that were a little bit weaker than expected. We, of course, also have rates unchanged by the Fed.
Meta selling some put credits, not a bad idea. Microsoft's starting to back off from the highs now.
Yeah, certainly we're seeing a knee-jerk reaction today to selling in the semiconductor space this particular week. As you say, we are green across the board, but we're not really green. It's really driven by large cap momentum, large cap growth. Predominantly, if you look at kind of value, you look at the rest of the smaller cap names, they're not really participating on this particular move here. So that really tells us that today's move isn't necessarily as broad as we would like, especially given kind of the sell-off over the particular week has been concentrated within tech. I think we're really just seeing a little bit of a snapback from what we've seen because, you know, this whole week what we saw was just indiscriminate selling within the semiconductor space and essentially rotating into the rest of the market. And right now we're seeing that take a little bit of a breather here today, especially as GDP numbers coming in a little softer than expected, but largely inflation moving in the right direction. Fed, you know, not necessarily in a hurry to raise rates. That should provide at least a more supportive stance here for the equity markets going forward.
All right, so let's jump into your picks because you brought some picks for us today. The first one is Intuit. I mean, one of the larger victims in the SaaS apocalypse here. There's a lot of discussion around how much AI might disrupt their business model. Of course, the owners of TurboTax and QuickBooks, things that people are utilizing AI for, down almost 8% today, year to date down 53+%. How are you looking at Intuit right now, Tony?
Yeah, so I think if you look at just
Microsoft rolling over a bit.
Earnings announcement this week, it really shows you that, you know, how investors are thinking about AI in terms of whether or not these companies are going to be able to generate enough revenue from AI to offset the capital expenditure. And software specifically has been one of the areas that has seen the most selling as over the concerns as AI displacement becomes more and more of an issue. But into it, I think, given how far it has sold off here over the last year or so, is really what, is worth taking a look, because they clearly continue to exhibit strong growth and adoption that offsets, if you will, the concerns that investors have had. And I think the chart is starting to reflect some of that inflection here, as well as some of these software names over the last few weeks, as semiconductors being sold, are actually starting to see a little bit of outperformance coming back into some of these names and into it. That breakout here above 300 is interesting.
Meta's breaking higher. Meta breaking higher.
Bottoming formation that has been taking place over the last couple of months is starting to be complete, and there's some signs that things are starting to move in the right direction here for this particular stock. Fundamentals remain incredibly strong here. We still see revenue growth in the 11-12% range. When you look at TurboTax and QuickBooks adoptions, you're looking at numbers that are growth numbers that are in this 20 to 30% range here. So there's a lot of fundamental basis for what looks attractive here, especially given the fact that it's trading at such historical low valuations relative to where it's been in the last couple of years. And AI continues to be a support for these particular businesses. The AI tools that they've been rolling out internally are seeing strong growth, and we're seeing that across the board, across a lot of businesses, not just Intuit, but also if you look at Adobe and some of those companies, that there were some major concerns that AI were going to disrupt these businesses. It's clearly, these businesses are clearly showing that AI is actually becoming a tailwind more than a headwind for these specific companies. And Intuit, I think, given the fact that we recently broke above that $300 level, shows us that investors are starting to agree that we were a little bit too pessimistic with regards to the disruption concerns for these specific businesses.
And you've got this software disruption theme here with Salesforce as the other name that you've brought today. As you think about looking at Salesforce, the chart not quite as dire perhaps as looking at Intuit. They're down about 33% year to date, the same pretty much over the last 52 weeks. But how are you looking at Salesforce? I know probably a lot of similar sentiment there, but if you were looking specifically at possibly trading this name, how would you do that, for example, purposes?
Yeah, Salesforce, very similar.
I mean, this is going to get into the Q3 results as well, right?
Yeah, absolutely. I mean, most of Q2, if not all of it, was wrapped up by the time that this is really starting to become a conversation, at least publicly. And so we're really going to have to look to see what Q3 looks like. Again, though, a lot of these companies still maintaining guidance. It's seen as a temporary headwind and something that they can really push past. I mean, you saw the reaction in Yum stock this morning when CEO there was more positive than I think investors were perhaps even expecting.
Yeah. Yeah, some of the taco comps up 7 was the beat. That was kind of always impressive, at least lately. Yeah. Brandon, busy morning on your beat. That is Brandon Gomez this morning. SEMA mentions Jersey Mike's waiting the first trade, indicated between 23 and 24. They did price at 23. Great fun with Danny DeVito, Eli Manning, and the CEO and founder earlier today. Now that we got our audio.
Jersey Mike's.
Yes.
Oi. I'm not crazy about I'm not crazy about their subs.
Less carbs. That they've got those options available. All right, coming up, the CEO of Shell joining us at the company. Discuss.
All right, Meta's trying to make new highs here. Meta, we're at the opening range high, trying to push higher. Meta, what about Meta? Let's see what the IV rank looks like now. Excuse me. Okay, IV rank is still 50%. All right. I don't know. Meta. IV's dropped quite a bit now. All right. S&P continues to fade. S&P. S&P fading some more. S&P back to below 73.75. Okay, we're only up 49 handles now. We're down quite a bit from the highs of the day. Continue to fade. Okay, SK Hynix at the highs. CBRS. All right, Cerebras, CBRS. Nice move here. We're trying to get back above that upper trend line. Basing the lows of the IPO now. Looking for this to turn back up. I don't even know if these are the right call walls and put walls now. Let me see. Cerebras. Do we even have CBRS? No, we don't even have it. Meta looking pretty good. Higher highs and higher lows on Meta.
Inflation remains elevated relative to the committee's 2% goal. The committee remains resolute. You've heard this before, but we will deliver price stability.
I think that the inflation rate is not going to go to 2 unless they start raising interest rates, and not by 25 basis points. And he's committed to that so forcefully that I wonder if he'll be able to keep rates stable in September.
The Federal Reserve holding steady in this week's rate decision, with Chairman Kevin Warsh reaffirming his commitment to getting inflation back to target. But Double Line CEO Jeffrey Gundlach says we're not getting there without a rate hike. Our next guest says there's a strong case for one this year. Let's bring in former Philadelphia Fed President Patrick Harker. A pleasure to have you on. Patrick, 3 policymakers voting for a hike. I believe that is the largest dissent against a new Fed chair since 1970. How significant is it?
Well, I think it's very significant. And you also have the non-voters, the other presidents, who I know at least a few of them most likely were for a hike as well. Look, the chair used the word a lot, and that was fine. But resolve, especially votes not actions. And I think at some point, probably September, he's going to have to start raising rates because today's print was not great.
Are there any wild cards you foresee that could impact the labor market data that would not with the start from raising in September?
See, the labor market conditions facing
I'm looking at Meta put credits. I mean, they command a lot of premium, a lot of premium. The 17 Delta is a 430. Let me see what that looks like. 430, 420.
So I think the chair may consider his communication strategy. Now he's got the task force looking at that, I understand. But the market will the blanks. And you know, what are the other things he said yesterday? He said we look at market signals. And he wants to stay quiet to look at market signals. Well, the market sent a very clear signal yesterday. But it's not just yesterday. If you look at the long end of the curve, the market is clearly sending a signal.
January. Let's go a little closer. Let's go, say, November. October. Okay, October. Next cycle.
That's the line out of Rosengren today. You know, they keep talking about 2% targets. It's hard to square that with real Fed funds fairly confident. So you think we go in September and like again in December?
Possibly, yeah, I think they're going to have to start a process of moving up. Yep. And, you know, there's a big argument in the economics profession of where the next rate is going to start.
Meta.
The fact is inflation is not going down 2%. They've got to move it. So
Yeah, if the Fed doesn't move in September, do you think that creates some level of back and forth between the Fed and President Trump, who this week did renew his calls for lower rates?
look, the Fed's got to do what it's got to do. That's its mandate. That's why it's independent of its monetary policy.
He did commit to the presser, I think, through year end. Pieces this morning looking at the effectiveness of the presser. He took 20 questions from 11 reporters. 14 of them asked for some kind of reaction.
Meta.
And it's an efficient use of this
Meta. Put wall 550. We're below the put wall, right? Yeah, we're below the put wall. Call wall is 750 for Meta.
Got from earnings from a lot of these consumer-oriented companies, Patrick, whether it's Chipotle, Starbucks.
Let's see what Meta had to say. Meta.
So this idea that this economy
Meta.
doesn't fall in favor.
Yeah, again, I think the inflation issue is
Earnings growth has slowed. 61 billion in the third quarter, they're expecting.
What do you think Japan does tomorrow?
Okay, they missed by quite a bit, almost $1.
Is it important what they do?
They missed by almost $1.
And same with BOE today. Do you think we're really?
Well, we'll see what they deliver. Patrick, always a pleasure. Thank you for your time.
Still ahead, Google DeepMind just unveiling new AI models to power humanoid robots.
Meta. Okay, puts are being sold down below. You can see Meta, this orange and blue. The blue is puts, the orange are calls. So people are selling the calls. They're also selling puts, which is creating some positive gamma down below. Cerebras. Okay, we're starting to bounce a little bit, S&P. A nice little pop this morning, the S&P 500. Faded a bit there. See if we can hold on to this level. I'd like to see it back above 7,400. Okay. $73, $73.50, 99%. Expect volatile price action inside of the red zone. Okay, let's see what Meta looks like here. Meta, opening range high. Volume picking up a little bit. Pre-market high is up here. It's 543. Does look like a double bottom. Potentially a double bottom here.
Some new AI models that can control a humanoid robot's entire body, previously upper body only now. Should team up with other robots. It can also tackle more complex tasks, ones that take several minutes and literally hundreds of decisions. For example, finding a baseball game on the calendar and then packing it gloved. Hands are getting better as well. Now we have unscrew light bulbs, tie off a garbage bag. Tesla's chief Elon Musk has called hands and fingers the biggest challenge in developing humanoids. He's actually talked at length about just how amazing the human hand is, all the muscles and fibers and dexterity. That's the biggest engineering challenge you've ever seen.
And they're doing it. Pretty incredible to see the advancements today in robotics getting smarter and more capable and flexible too. Time to go for these updates.
11:27. Wow, the day is flying. Okay, update. I'll need to leave around 5 minutes to 12. Take me about a half an hour. I got to get the car and I need to get some cash from the bank. I'll be out tomorrow. Looking for Meta to bounce here. I'd like to sell some put credits, like 20 deltas out in October. About a 30%, about a 30% return on investment. Meta 470 would be down here. 470. $470, $475 credits. I'm looking at for October. All right, I need this to turn up before I do that, if I do it. Meta.
The 50-day has not been violated since late March. So I think that might be the moving average to monitor. That's around $48, only about 4% from where we are here. But ultimately, you're looking at a stock in an uptrend that's simply pulling back from highs.
Let's zoom in though onto this 90-day chart though and take a closer look at this pullback and what you're seeing specifically.
Yeah, very much the same stuff, Marley. Short term, a bit of weakness over the last day, 2 days, 3 days. You'll see that we pushed into 51 and a quarter there a few times. That's the line of best fit once more coming into play. But keep an eye on that blue. It's a 200 period moving average on this 90-day 4-hour chart for CSX. That's just under 49. And that's consistent again with that 50-day moving average that we tagged at about 48. So it looks like, from our MACD down below, it's been an aggressive sell down, admittedly. So if you're a patient trader, it's probable that you're looking for maybe a little bit more bleed through and weakness into that $49 level. That'll lead to a potential shift in that MACD, giving you the crossover opportunity in the shorter term.
All right, Jason, so you highlighted the strong numbers. You highlighted that we're still seeing goods moving on the railroads, but you also highlighted some uncertainty as to potential volatility, whether or not freight volumes are going to stay where they are. So as you think about trading CSX, how would you approach that?
So for this one, I like the idea of potentially owning the stock, but I don't want to just go outlay the cash, $50 a share, and then just sit back and wait. So I would look at this as the September 18th, 2026 option. I would sell a cover put, the 5250. It was going for about 250 before the market opened. You may be able to get a better credit than that now that it's down about 87 cents. So
Excuse me.
you can get the 250 for a better credit at this moment.
Meta.
At $50 if the stock gets put to you, which is trading about 13 cents below that right now. You also can see that the stock gapped up over earnings, and now it's kind of coming back to fill that gap. So I want to see if this level holds, or like you said, if it pulls back to the 50-day moving average. But I like the thought of getting the credit, getting paid to buy this. You lower your potential price that you're buying it at, and then you control your capital risk. So if you just decide, you know what, it broke through the 50-day moving average, I don't want to own this, I don't want to be in it, I don't want the stock to get put to me. You could just buy that option back, cost you, 250 times, depending on how many contracts you buy. But versus putting out $50 a share, I like that as more of a controlled entry into a stock that I believe is going to continue moving up. But if it doesn't, it's easy to achieve to buy it back and take a small loss on this.
All right, and today's CSX is down about 1 3/4% right now at 49.80.
Happy birthday, Corey.
You both being with us today to take a closer look at these three names for the big three. Jason Brown from thebrownreport.com and Kevin Horner, thanks again for being with us. Coming up next, we are going to spotlight AT&T's second quarter earnings report and the future of the telecom industry. We'll be joined by the company's head of investor relations next.
All right, still in the volatility zone. Okay, we want to push back up into the white zone.
Markets. Download the Schwab Network app to get live.
Okay, SoFi hanging out at the highs. SoFi, that one got whacked yesterday on earnings, right? Bouncing back up in a larger range. I have 2028, June 2028 calls, so I'm not really that worried about it at the moment. If it starts to lose this area here at 14, 15 or so, then yeah, we got issues.
Planning for their college educations. Someday it'll be their turn.
SoFi looks like a big range.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning movers, be the first to find out what's shaping early market action. Check, options corner, futures focus, technical analysis. Morning movers covers it all. Grab your coffee. champion. Tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Schwab coaching is concepts brought to life in the real world. It's absolutely world class. In the industry, around the industry.
Okay, what's Microsoft doing? Microsoft stocks are just kind of hanging out at the moment. Microsoft from the highs. Okay, we sold some credits over here. They're up a little bit. Give it a little time.
It's what moves the market. Download the Schwab Network app and stream anytime wherever you are.
Trading at Schwab.
Oh wow! Happy birthday! Happy birthday, Grover.
Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help, access support by phone, email, and in cloud.
Happy birthday! Wow, I didn't realize they had so many.
Headquarters. It's time to spotlight second quarter earnings from AT&T. Joining us now, Brent Feldman.
Okay, Microsoft's starting to bounce.
Brent, great to see you. I mean, looking across these numbers, you beat expectations.
I want to sell some Meta Premium 2 out in October, next earnings.
Well, first of all, thanks for having me back on the show, Marley.
Oh, wow.
And you're right, we had
Today?
a terrific
Today, Captain?
year. And let me tell you, we've been investing at the top of the years. That means we have built the biggest, fastest growing fiber internet network in the country, and we already have the largest 5G
Ah.
modernizing as well. So we came into this year, we told our shareholders as a result of this investment, we're going to start to see.
Oh, she's stubborn, or it's her birthday, or both?
Results. It all starts with customers. We added over 1 million new subscriptions to our TV connectivity services. So that's a combination of our fiber internet product, our fixed wireless internet product, and our standard postpaid phone product. That's over 1 million new subscriptions. One of the best quarters that we've had. Every single one of those product categories added more customers than we did a year ago.
Money Magic is the diplomat. Happy birthday to everyone. that's funny. I'll laugh my ass off.
So what you're really seeing in our second quarter results is the accumulated momentum of industry-leading investment that we've been making non-stop.
Let's dive into some of these numbers because they are impressive.
Oh boy. All right. Markets are acting pretty good, all things considered.
Just becoming an increasingly more competitive space.
Practice a little bit more. It's the best quarter we've ever had for combined fixed wireless and fiber customer additions, and it's one of the best quarter years for fiber by itself and by the phone base by itself, which is what you were just alluding to. And what's pretty fascinating about that, for anyone who really understands this industry, the second quarter of the year isn't usually when you get most of your growth. This is still an industry where the second half of the year, particularly the tail end of the year, tends to have that momentum. So the fact that we're setting records or near records in a slow part of the year, I think is great evidence of the type of momentum that we're building up. And the answer to the question as to what's working, consumers increasingly want to get all of their connectivity from one provider. Nearly 80% of households have said that they would prefer to have one connectivity provider get them on the internet, whether they're at home or whether they're on the go. That's the core of our conversion strategy. We haven't just been investing in a fiber network or in a 5G network. We've been investing in both, and we've been evolving our products to make it easier so that customers who want to be.
All right, Microsoft moving back up. SK Hynix turning back up. Okay, watching Meta for a move higher. Meta starts to move higher. I'm going to sell those October put credits.
building the right networks and putting these easy converged offers in front of consumers that's really driving this growth.
So Brett, you've got record growth at an arguably slower time of the year. You also have very low churn. Your churn stayed really low as well. How sustainable is this performance going forward, knowing that your competitors are continuing to offer increasingly aggressive promotions pretty much across the board?
We operate in a competitive industry. We assume it's going to be competitive. We plan for it to be competitive. And that's why you have to invest the way we invest. Households that get more than one service from one provider, so a household that gets their internet connection and their wireless connections from AT&T, stay with us longer. That has been a consistent trend. The metric that everyone points to is the one you alluded to, which is churn rate. It's a percentage of customers who leave you in the quarter. We have been the lowest or among the lowest in the industry for several years now. And we don't think it's a coincidence that because we keep growing our base of customers that are getting more than one service from us, they're just happier. They like being with one provider. It's harder for them to make a decision to switch. And so we feel really confident that as we continue to grow our base of customers on both fiber and 5G, we're going to continue to show really great customer retention, even in a marketplace that we expect to remain very competitive.
And Brett, your CEO had some commentary that really made me perk up, and I've been waiting to ask you about it. He said, "We believe our network performance and operating scale can't be matched." And then he also said that AT&T has quote unquote structural advantages heading into the next era of connectivity. So I'm hoping you can share with us what you view those advantages are and why you believe that the competitors can't replicate them.
That's a great question. Thank you so much for asking. In order to really be a great connectivity provider, you got to do three things well. You got to build great networks. We've been talking about that. We've been investing more than anyone. You got to sign up customers. We just talked about that. We're doing a great job. And you got to keep them happy, right? You got to give them great service. And so you can't just have a good network. You can't have just a good advertising campaign. You have to have scale across all facets of your business. And so in the areas where we build our fiber networks, we build them with density, we build them with scale. And once we have that fiber in the ground, we know that we can offer the best product experience at the lowest marginal cost, which means we can really get our price points where they need to be competitive and to grow profitably. But I think even more important is that we aren't building our networks to meet our customers' needs only today. We're really trying to think about where demands for networks are going over the next decade. And I think we can all intuitively understand that over the next decade, the way that people and businesses and machines engage with AI tools is going to become probably one of the predominant drivers of why you're connecting to the internet. And that is going to completely change the performance requirements of networks. You're not simply going to have to be able to deliver a decent video stream at peak hours or connect a phone call. Lives and households and businesses are going to be running off these applications, and they're going to ask networks to have performance success that is different than we've seen in the past. If you aren't investing in the best technologies, particularly fiber, 5G networks based on lower frequency spectrums, you can get the traffic back to the network just as quickly as you can get it down over midband, then you just aren't building the right type of infrastructure for the AI era. And if you haven't been doing it for the last several years like us, you're going to have a really hard time catching up. So he was really talking about not only the networks that we're building and how well they're positioned for where demand is going, but also making sure that we're building a company that can sell it and service customers in a really competitive marketplace.
And Brett, I'm so glad that you answered that how you answered it, because you walked me right into my last question here. I saw that you completed your $23 billion acquisition while we're talking about spending of some of the spectrum and wireless contracts from EchoStar. Take us through where that fits into that bigger picture of what you're offering that competitors can't match.
Yeah, I'm pretty sure that the transaction we closed earlier this week was the largest ever private acquisition of spectrum licenses, meaning you would have to seen something like that in a government auction. So it was record-setting in that regards, and it has brought into AT&T really valuable spectrum that is perfect for this era going forward, where you're going to need to continue to deliver a lot of bandwidth down to your customers, but you're also going to need to be able to get those connections back to the network.
Intel.
You know, in an AI world, you're going to be sending as much information into the internet as you're getting from the internet.
And on a cell phone, the best way to do that is over lower frequencies. It's because it's a much more efficient way. It doesn't make your phone work as hard, doesn't make your battery work as hard. And as a result of this transaction, we now have a leading position in lower frequency spectrum. It's arguably one of the scarcest resources in the industry. And so we really think that we've put ourselves in a place where whether you're connecting over the fiber internet when you're at home, or if you're trying to connect over the 5G internet when you're away, AT&T has the resources in place to be the best option for getting on the internet and staying connected to the AI tools that are going to be increasingly important to you.
Brett, always great to have you on the show. Really appreciate you taking the time to be with us today. Brett Feldman, the treasurer and the head of investor relations over at AT&T. Coming up next, we've got the disruptors. We're going to break down the earnings from Fortinet as shares are higher following strong earnings and guidance. Trading 360 will be right back.
All right, Snowflake moving a bit higher. Netflix is turning finally. Okay, Netflix turning back up. Let's see what Netflix looks like. Netflix.
24 hours a day, 7 days
Netflix, nice little move here so far. Back to the opening range high.
Schwab Network, available anytime, anywhere, on any device for free.
How's it going?
Actually, you know what?
Sometimes, you know,
Okay.
you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Netflix turning up.
Live at the New York Stock Exchange, and this is the watch list. Your midday view into the trends driving the markets with a sharp focus.
Back to the opening range high. Netflix had a nice little run yesterday.
Leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The watch list, 2 p.m. Eastern, only on Schwab Network.
Back to Trading 360. I'm Marley Caden here in our Chicago headquarters. It's time now for the disruptors.
All right, breakout.
Our senior markets
Opening range
correspondent here to take
breakout.
a look at Fortinet today, jumping after earnings. We got
Netflix going.
within highs here, Georgia. What's the move to the upside here?
Yeah, so I'll kind of bring that back to Marley. I was looking at the technicals, and we're still not above the early July highs, but nonetheless, if you look at Fortinet in terms of their business outlook, they're still one of the leaders.
Opening range breakout. There goes Netflix. Okay, going.
Integrating network security solutions with firewall protections. Overall, if you look at the competitive landscape, which includes CrowdStrike and Okta, Cloudflare is another one, as well as Cisco Systems and Network Security. They've been growing their business quite nicely. If you look at the report in terms of EPS and sales, they posted 90 cents on adjusted basis versus 75 cents expected. It was higher by 41%, as well as sales that were higher at 2.05 billion versus 1.89 billion. By 26%, but they denoted that their billings growth increased by 33%. That's important relative to sales. You want to see those numbers rise faster than sales, as well as their core firewall business grew 34%. And they also talked about how they increased their adjusted free cash flow margin to 49% of sales. So overall, even the Q3 guidance was raised to essentially 85 cents from 76 at the midpoint, as well as the adjusted the sales number to 2.1 billion from 1.95 billion. But if you look at the price action, it's very telling because some of the analysts now are still bullish. If you look at RBC, 185 from 160, Evercore increased their target to 165, and Rosenblatt increased their price target to 195. These are marginal increases compared to one would say is a pretty robust earnings quarter.
And so, George, with all of that said here in this move that we're seeing today, they're up almost close to 100% year to date. How would you look to trade this name for example purposes?
Well, so again, going back to our first part of our conversation, Marley, is we'll look at the price action. The stock did attempt to break above the July 15th high. It's pulled back a little bit. It's still higher today, and the report was quite good. So what that suggests to me is the market is looking at the movement in the year on a year-to-date basis, which is basically double, as already priced in.
Okay, I gotta go here.
And that's why some of these analysts have increased their targets marginally at best. So what I'm going to do in this case is I'm going to play this price action, which is still above the 50-day moving average, is potentially developing into a trading range. And I'm going to sell premium on the lower end of that range, right around the 50-day moving average of around $145. So I'm going to go out to August, 22 days to expiration. I'm going to sell the 145 cash secured put for $4 a share in credit, or $400 a contract. So in essence, what we want to see here is time decay over the next 22 days, price maintenance at the very least.
All right, I got to run.
Which is right around that 50-day moving average, and
5
you're
minutes.
earning
5
around
minutes.
$4 in premium, which again will erode over time, assuming that the stock price remains above 145. Now, if you do structure this trade, you have to be willing and able to post margin and take ownership, because you'll be assigned shares at 145, but your cost basis is 141.
All right, right now we are at 154.98, up a little bit more than 1% for Fortinet following that earnings report. George, really appreciate you taking us through it today and also for that example trade. George Tillis. And we'll move now to Meta, under pressure today after missing earnings estimates for the second quarter, with costs and expenses rising 55% year over year. The social media giant raised the lower end of its increasingly important CapEx guidance for the year by $5 billion.
All right, we're just watching Netflix at the moment. Netflix.
Today to take a closer look at the numbers. Ali Mogharabi, equity analyst.
Opening range breakout, looking for a push higher.
CIO of Founder ETFs. Lauren, let's start with you. And we're looking at Meta down almost 9% right now. What are some of your key takeaways from the report we got yesterday?
Yes, it was a disappointing quarter. Sales beat 1%, earnings missed 28%. Sales did grow 28% year on year. Meta now reaches 3.6 billion people daily, but they also were a little bit light on their sales guidance for next quarter, coming in at
Microsoft trying to get back up to the opening range high. Microsoft.
Expected. They also, as you mentioned,
Amazon at the high of the day, almost at the high of the day again. Above the opening range high. Netflix looking good, looking for a follow through. Snowflake. The New York Fangs look okay.
Investments they're making, but it's eating up all of their cash flows from operations. They had the lowest.
New York Fangs look okay.
For free cash flow generation. So
look at the difference, what it looked like yesterday. So if we fail again today, that would be bad. If we manage to hold this level, we hold this level, that would be good. Okay, so when I come back from picking up the car,
the street is giving it credit for right now.
I'll look at
Core
that.
business is, I would say, stronger
let's
based
see.
on the Q2 numbers.
Praise.
Yes, than the street is giving it credit for. However, the street, as your guest also mentioned, the street is also looking ahead. So when you're looking ahead, the guidance that they gave for Q3, I mean, that's deceleration, and you don't want to see that with a firm that's dependent on only one revenue model, which is right now pretty much all advertising, and at the same time spending so much heavily, in terms of CapEx, and seeing its free cash flow dwindle. So it's the street. What the street wants is, and I think this was very unclear on the call, was how are you going to monetize all of these these two huge data centers that you've begun to build? And in terms of monetization, are you going to go to the enterprises specifically? Are any hyperscalers showing interest in working with you on those in those data centers?
Okay, Amazon pushing a bit higher. Amazon looks like it wants to go.
Revenue model, which is advertising, in my opinion, demonstrates a huge risk for this company. Again, especially as it continues to spend a lot on data centers and on its computational capabilities and AI.
And Lauren, you both mentioned capital spending, of course, a huge focus here. Free cash flow then falling to $784 million, which Ali just hinted at there. At what point does AI investment just become too much to accept? Mark Zuckerberg made an argument on the call saying these investments are going to create the next generation of AI products and services. Do you view investors still trusting that vision overall, or has this proof of monetization concept just taken over for Meta?
Yes, Mark said that this is going to be the next big thing at Founder ETFs. We believe in our founders. Mark has the vision, conviction, and grit. So even though we're disappointed by today's results, we do stand by Meta, and we still believe in the long-term thesis. By our estimates, the compute required to switch from just a Google user over to AI is about triple. Right now, we only have, double to triple capacity plans. So we're very comfortable with the giant projects that have been announced. We think that he's making a big bet, but we believe that it will play out over the next 5 years.
Dive into the free cash flow concerns here, because you called this a low quality beat, highlighting free cash flow as one of the reasons it was low quality. And
All right,
it's
Meta's starting to
concerning.
turn up. I'm going to sell these put credits for October.
Free cash flow for a company like this that has historically generated enormous.
Okay, I gotta go. Gotta go.
It's just moving this behemoth that is Starbucks, but some of the changes that they're making, which is kind of really focusing in on kind of making so yeah, it seems like it's kind of full steam ahead for Brian Nickel and Starbucks at the moment.
It's interesting because I'll see, when I come up to my Starbucks, the drive-through line is crazy long, and people, they gotta be waiting, I think, for like, I don't know, 10, 15 minutes. I walk into the store, there's only like a handful of people in there. It's crazy how the experience has changed since, the last 20, 25 years.
Yeah, absolutely. And I think that's kind of part of what they are kind of navigating is like the different ways that people consume coffee. Like Starbucks needs to be able to do it across all of the different platforms. And I think that's also where they made a lot of investments. I think we just heard Brian Nickel talking about how, even in just shaving seconds off, they do so, probably millions and millions of transactions a day. Like it equates to a better experience for everybody. But look, they're investing kind of across the board, across all of their different channels, be it drive-through. So they're definitely trying to make some technology improvements there. You heard them talk about staffing and stores, things like that. That also kind of improves the experience. And then also their digital. They're trying to kind of find ways that the digital experience is still quite seamless for people as well. So they're not waiting for those drinks because those people are obviously in a rush, just like the drive-through line.
Yeah, and I would say, again, just about my experience at my local Starbucks, 95% of the in-store orders are picked digital. I'm the lone dude who goes up to the cashier and actually orders it directly from the barista. And they're kind of like a little shocked when they look up and there's actually a person standing.
Yeah.
An old dude, yes, but with gray hair. But that's just the way it is. And I think it's gotten so much better, I think, over time.
Yeah. I mean, they have to be able to do it all, right? Like it has changed a lot, obviously, and they've been probably like a big part of that change. I think like Starbucks has done a lot in the past to like kind of train consumers, like this is how you consume coffee to some extent. But they're making the investments where it matters right now to make sure that no matter how you come in, if you are wanting to have a chat with the barista, they've done this whole green apron program and training those people to even be more kind of welcoming and smiling, the cups on the name from the cups, things like that. Like again, it's like all these sort of like marginal things. It's sort of what are the opposite of a death by 1,000 cuts is right? Success by 1,000 cuts. That's kind of this approach for something like this size. It kind of requires that sort of intention to be looking at every aspect of the business and making sure that it's what the customers need.
Well, from coffee to burritos, Chipotle, they also raised their guidance here. I'm a big fan of the Chipotle on 3rd Avenue.
Me too.
What's going on at Chipotle?
Chipotle is kind of a similar story in a lot of ways, which is interesting because like obviously Brian Nickel had so much success there, but they're kind of instituting a lot of similar, kind of following the playbook of Starbucks to some extent. They're trying to get their stores faster with a lot of these upgrades. It's more back of the house with Chipotle. They're making sure that their kitchens are kind of upgraded and able to make sure that if you come in and you want whatever the LTO is of the moment, it's there. But they're also doing things similar to Starbucks, which is expanding the menu and trying to get people coming in at different parts of the day, but doing it in a way that is gonna, still fit with how people are feeling their budgets kind of shrinking at the moment. So one of the things that Chipotle is having a lot of success with is these protein cups. It's just a cup of chicken or steak or what have you. But it's helping them do two things. First of all, it's helping people just come in at different parts of the day. They say that, during the call, they kind of made this point that it's not sacrificing your usual lunch. It's maybe now you're coming in at 2:00 when you kind of need a little extra boost. Similar things at Starbucks, trying to push some of these lighter drinks to try to expand the occasions, but also for Chipotle, they say it's actually driving people to like add more to their meals. So, maybe I'll get the extra scoop of chicken as well. I'm trying to hit my protein goals. So some of those things, right? Like those things are important to people right now. And so Chipotle kind of, following the sort of the Starbucks playbook here.
All right, there you go. Some good numbers out of Starbucks, good numbers out of Chipotle. Another example of the consumer hanging in there. Red Brown, thanks so much. Appreciate it. Red Brown's a consumer reporter for Bloomberg News, joining us live here on Bloomberg Interactive Broker. I didn't know I had a protein bowl. Check on that. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories and global business headlines in just a moment. Market continues to hold on to the gains here. The S&P is up 80 points, 1.1%. The Dow's up 350 points at 0.7%. And the Nasdaq's up 550 points, 2.25%. 10-year Treasury yields coming in a couple of basis points, 4.65%. WTI crude oil a little bit lower, sitting right at $84 per barrel. This is Bloomberg. Good morning.
ABC News, I'm Wayne Cabot. Breaking news out of the Capitol. President Trump may be breaking with Todd Blanche, Attorney General, saying on Truth Social he's considering pulling the nomination of his one-time personal attorney. The Senate Judiciary Committee had been expected to vote today on this.
The scheduled committee vote was scrapped, with two of the panel's GOP members saying they're not ready to support Todd Blanche's bid. Tom Tillis and John Cornyn say they want to see it in writing. Pledge from the AG nominee that the administration's anti-weaponization fund is truly dead. Blanche has repeatedly said the fund is not moving forward, but the Republican holdouts have said that's not enough. They've also got concerns about Blanche's sweeping order barring audits targeting Trump or his family.
ABC's Stephen Portnoy, the president just now saying he may pull the nomination for now, but try again once Cornyn and Tillis are out of office in January. As fighting escalates with the U.S. and Iran, other Mideast nations are fending off attacks, sometimes unsuccessful, says ABC's Matt Rivers in Amman.
Once again here in Jordan, we had incoming fire from Iran overnight. U.S. troops forced to take cover in their bases here for the second straight night as 5 Iranian missiles were ultimately intercepted. Egypt also being targeted by a drone attack, and that is a major escalation. The first time that that's happened since this war began. U.S. forces in Kuwait targeted once again overnight as well.
A suspected Russian cruise missile left a giant crater in eastern Poland, apparently meant for Ukraine. As world energy traders wonder if the worst is still to come, for the average person, the turmoil is measurable.
New estimate this morning from Moody's Analytics shows that the typical American household has now spent an extra $672 in gas, diesel, home heating, and jet fuel expenses combined since the start of the Iran war. Gas Buddy is also predicting that drivers will see the highest prices for the month of August on record.
ABC's Elizabeth Schulze, the Dow now up to 328 points. You're listening to ABC News. License plate readers, but despite the criticism, more than 100,000 of these AI-powered cameras are tracking vehicles in all 50 states.
Law enforcers who use the technology agree with Mark Nelson of the Oklahoma City Fraternal Order of Police.
This changes the game on how we're able to accomplish public safety, but not universally in Los Angeles.
Until we can get those data, privacy, security, and sharing concerns ironed out.
The LAPD's Dean Gialema says the license reading cameras are being shut off.
ABC's Jim Ryan. More about the allegations against the actor Jared Leto from ABC's Hannah Battah.
Explosive allegations against Jared Leto, who won an Oscar for his role in Dallas Buyers Club. He starred in the
string of Hollywood movies, including Tron Ares and Masters of the Universe. But now he faces new allegations of sexual misconduct from multiple women who spoke to the BBC in the documentary Jared Leto, Hollywood's Dark Secret. ABC News has not independently verified these claims. 4 of the women say they were teenagers when they met Leto, who was in his 30s and 40s.
Leto denies the allegations and has not been charged with the crime. There'll be a new way soon to get your food delivered faster. DoorDash now has approval from the FAA to start its own drone delivery service. Build its own aircraft too, food from the sky. There's no timeline yet when the service will be operational. I'm Wayne Cabot, ABC News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Egypt is pulled into the war. Welcome to the Thursday edition as LNG vessels are struck by drones in a port in Egypt as the U.S. pounds dozens of more targets in Iran, a day after Saudi Arabia did the same. We tackle the widening war coming up with Bloomberg Jerusalem correspondent Dan Williams, who joins us here in our studio straight ahead. Sam Altman and Jensen Wong spending the week in D.C. to make the case for AI advancement and open weight models. We're going to talk about their mission with an expert. The Oracle of AI is with us today. Gregory Allen from Decision Tree Research. Todd Blanche's confirmation to be Attorney General suddenly on ice, thanks to just 2 senators crossed by President Trump. We'll have analysis from our political panel straight ahead. But first, Wall Street, where at least some stocks are bouncing back today. Charlie Pellet has a look for us live from World Headquarters in New York. Hey, Charlie.
Well, hello there, Joe Matthew. I'm looking at a stampede of dip buyers coming into this market. Got to begin with the stocks because we got semis rallying. It has been a familiar story. I've been telling you, one day stocks up big time, another day down big time. Right now, I am looking at a gain of 8.1% on the Philadelphia Stock Exchange Semiconductor Index, ripping higher. Shares are beating up now by 8.1%. Bottom line here, NASDAQ 100 index up more than 3%, up 3.1%. NASDAQ Composite up 2.5%. S&P higher by 90. That is a gain of 1.2%. Dow Industrials up 342 on the Dow, gain there of 0.7%. So a rebound in giant chip makers lifting stocks, dip buyers coming into the market on speculation that the AI trade will have more room to run. After the close of trading today, we will be hearing from both Apple and Amazon. A day after the Fed, we've got the 2-year 4.21% with a 10-year 4.66% and the 30-year 5.20%. The VIX, by the way, holding just above 18. Gold now up 1.1%, 41.12 the ounce. West Texas Intermediate crude retreating down 0.4%, 84.11. Brent 89.75 right now, down by 1.1%. White House National Economic Council Director Kevin Hassett says the inflation data makes Fed Chair Kevin Warsh's job a little easier. And on Bloomberg this morning, Hassett told us he does have full confidence in Warsh.
New leader comes in and tries to get the house in order. I think that, that there were 3 dissensions or 3 dissents, but, that happened to Jay Powell in the past as well. The dissents all came from regional Fed presidents, not from the actual governors. And so it sounds like he's got his house in Washington in order.
White House National Economic Council Director Kevin Hassett interviewed this morning on Bloomberg. Coming up after the close of trading, Apple down now by 2.2%. We also hear from Amazon, that stock up 5.5% ahead of earnings. CapEx obviously going to be the big story today. Meta Platforms, after last night's report, plunging by 8.5%. Microsoft heading completely the other direction after earnings, surging now by 16.1%. Recapping, the stocks up 8.1%. S&P higher now by 1.2%. Lots going on again today, Joe Matthew, and that is our Bloomberg Business Flash.
All right, always a pleasure to meet Charlie Pellet, smack dab in the middle of earnings reporting season. It will be another doozy after the bell tonight. And what a difference a day makes. This is wild. It's just a complete reversal of everything that we were talking about at this time yesterday. The thesis doesn't last more than 12 to 24 hours around here right now. So if you're trading, I don't know how you're making. If you sold Micron yesterday, I really do feel for you. up $122 right now, bouncing off the floor. And it's, I guess, thanks in part to this whole situational awareness story. We'll have to talk more about this. Leopold Aschenbrenner looming large as Citadel. Ken Griffin Citadel buys a big chunk of the holdings from this hedge fund led by the former OpenAI researcher, all of 25 years old. Is this why we just went through all that for 2 months? SK Hynix and Micron among his top holdings. We'll be watching markets throughout the day, of course, here on Balance of Power. While we talk politics in Washington, Charlie's got Wall Street covered in New York, and I'm awfully glad you joined us here on the Thursday edition on Bloomberg Radio, satellite radio channel 121, and streaming live now on YouTube. Search Bloomberg Business News Live to find our live stream and join us right here in the studio on what is day 96. 96 days left until the midterm elections. So everything we talk about here, whether it's geopolitics or domestic issues, is colored by election season. In just a couple of days, senators will join House members in their respective districts, and all they're going to be doing is running for re-election for the rest of the year. Big news from Iran overnight, or should I say from Egypt. This time yesterday, we're talking about Saudi Arabia getting involved. Saudi Arabian fighter jets flying side by side with Americans hitting targets in Iran. Overnight, Egypt, 2 LNG vessels in an Egyptian port were struck by drones. No one's taken responsibility yet, but the radius continues to widen here. And there's no off-ramp. There are certainly no peace talks scheduled. Benjamin Netanyahu, who was in Washington to meet with the president just a couple of days ago, talking about the menu of options that lie before leaders as we speak. Listen.
He's got basically 3 options. 1, to indeed succeed in making the deal. 2, to continue the blockade. 3, to take military action. Anything that will produce the end of Iran's nuclear program is what that's our common goal. We actually analyzed all 3 possibilities, and I thought we did it in an open way between friends and allies, and it's his decision.
Netanyahu talking on ABC News about the meeting with the president this week, remembering reporters were not brought inside, so that's as close to a readout as we will probably get. We have been blessed this week to have Dan Williams with us in Washington. He was at the White House for the meeting with Netanyahu, and he's got one more day in the Capitol, so we wanted to pull him in, our Jerusalem correspondent at Bloomberg News. Dan, it's great to see you. Welcome back to Balance of Power.
Pleasure.
What do you think when you see Saudi Arabia on Wednesday, Egypt on Thursday? What's going on?
This is a muscular intervention, a more muscular and public intervention, effectively by a US aligned power there that has been at the receiving end of these attacks, not just from Iran, but also from Iran aligned Houthis in Yemen. What it's doing now is displaying a public military prowess that it was more restrained about talking about earlier. Effectively, we have a pronounced proxy war here emerging. The war between Iran and the United States hasn't really stopped. There was a bit of a lull ahead of this visit by Netanyahu as Trump pursued yet again talks through Oman on tamping this down, perhaps receiving or reaching a resolution on Hormuz. It's now restarted, but again, it's below the threshold that could be defined as full war. What does that mean? The Americans aren't striking deep inland. They're mainly striking around Hormuz at military facilities that could endanger shipping. And the Iranians are striking at Iranian-aligned powers like Saudi Arabia, potentially Egypt, although Iran has not taken credit for that LNG strike that you mentioned a few minutes ago. However, they're avoiding Israel, the Iranians, right now, and there's a good reason for that. The moment the Israelis are hit by Iran, should that happen, they've said they will attack with full force.
Wow.
Then we could say we're back fully into this war.
What do you make of Benjamin Netanyahu's demeanor in that interview? And the reporting that came from the meeting was that he was very light touch in his approach to the president, simply sharing advice, sharing information, not coming to Washington with demands. Sounds like a successful visit.
It would be defined as such. I can tell you, having spoken to a very senior member of his retinue yesterday, that's certainly the way the Israelis are seeing it. They came here to close ranks anew with the US president, with his administration, after a swirl of reports, sometimes open statements by the president in recent weeks, expressing not just his vexation, his exasperation with the course of the war, but also to a degree with Israeli conduct, especially when it came to the second front, which is in Lebanon. Now, Israel is not part of this resumed fighting with Iran. That appears to be by design. The Americans have requested it. and the Israelis are happy to content themselves with fighting Iran-backed Hezbollah in Lebanon. I think Netanyahu's point was to show the world and his electorate, he's up for re-election in October, that things are okay yet again with the US president, and also to publicly voice, should we call it, a submissive posture with the alpha dog. Forgive me being colloquial, but I think that Trump would approve of a term like that. He calls the shots. Netanyahu, in his own words, is the junior partner. I think this aims to dispel theories that have gone around that Israel was the Trump whisperer, pulling his chain, pushing him into this war. That's not the case. It's Netanyahu coming, sharing ideas, saying he did not offer a proposal or formula of his own. He wanted to hear what the president wants to do, and it's fully supported.
You referred to an Iranian proxy war. You've already mentioned Hezbollah. What is Hezbollah's posture right now following very intense fighting with Israel a couple of weeks ago? And how come no one is talking about Gaza, Hamas, which is effectively how this all began?
That's a very good observation, and we are expecting in the near future to hear news from Gaza. There are multiple proliferating press reports in the last 2-3 hours that Hamas has agreed to disarm under a US-sponsored plan by the so-called Board of Peace. It's an international consortium set up to take Gaza from ceasefire to peaceful reconstruction and recovery. That requires, at the very least, that Hamas put down its weapons, become reabsorbed into the Palestinian body politic as another political party, not a subnational group. The Israelis have said they're open to it, but according to every diplomat involved, it hinges on Hamas disarmament. Hamas has yet to confirm those reports. If indeed we hear in the near future that it's laying down its arms, that will entirely shift this crisis. Obviously, there are many fronts, but Gaza is the ground zero of this multi-front war culminating in this current US-Israeli war with Iran. Presumably, once Hamas feels comfortable enough to take that step, Hezbollah may follow in Lebanon. Iran will be losing 2 of its proxies on the Mediterranean coast. It may actually become mortified, feeling that its influence in the region has been cut down, or it may see itself also in a position to rethink its entire posture, at least when it comes to the United States and straightforward.
This would be dramatic news if it were to happen. And not to digress, but what would this mean for Gaza? No one knows this better than you. Would there be immediate investment? How would this rebuilding take place?
It wouldn't be immediate, as Mladenov, he's the Bulgarian diplomat who now heads effectively the Board of Peace, has said no one's going to invest when they're worried that there is a bomb or an armed gunman around the corner.
So first, trust would need to be established.
Trust verification, and also not just an end to the arsenal wielded by Hamas, but an end to the tunnels dug by Hamas. Hamas still controls 35% of the Gaza Strip. It has tens of thousands and low tens of thousands of fighters, many of them teenagers, effectively conscripted because of their lack of other options now. They really are destitute in the Gaza Strip. So what there would be is a process beyond the giving up of the arsenal verification process. Engineers sent in to dismantle what remains of those tunnels to ensure that there is no underground infrastructure for Hamas or another armed group to fall back on. Then we will see long-term reconstruction as well as an Israeli.
You're prepared to report on that?
I'm very much looking forward to it.
The greatest developments of your career.
Absolutely. You have a part of the world that has suffered immense for decades, certainly the last 2.5 years. And literally from the ground up, I don't mean to be blithe about it, but the destruction is widespread. A sea of ruins in what used to be the Gaza Strip. Many people living in tents. It would be one of the biggest rehabilitation projects we've seen, certainly in this century, potentially since the late 20th century, the mid-20th century.
Dan, we're so lucky to have you, and it's been a real treat to have you in Washington this week. I hope that you'll come back. I'd love to come see you at your home someday as well. Well, thank you for being part of it here. How about this? Dan Williams in Washington, D.C. Back to Jerusalem he goes, reporting for Bloomberg News. And many thanks to Dan for being with us here. We turn to the AI race next. Greg Allen's coming in, only on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We're looking at the S&P 500 index. Best level of the day right now, up 98 points. That is a gain of 1.4%. Dow Industrials are surging 438, up 9/10. NASDAQ up 2.6%. The NASDAQ 100 index up by 3.1%. And the SOX, the Philadelphia Stock Exchange Semiconductor Index, now surging by 8.3%. A rebound in giant chip makers lifting stocks, dip buyers coming into the market again. That stocks number bears repeating, up now by 8.4%. The 2-year yield after yesterday's Fed decision, 4.21% with the 10-year, 4.65%, and the 30-year, 5.20%. Gold up $48 the ounce, now at $41.15, up 1.2%. West Texas Intermediate crude down 0.8%, 83.80 a barrel. Brent 89.50, down 1.4% as oil traders continue to monitor developments in the Middle East. Oracle shares higher after saying it will expand a partnership with Google Cloud to bring Gemini AI tools to its business customers. And Qualcomm, the largest maker of smartphone processors, gave a weak profit forecast for the current quarter, signaling its component shortages and rising costs are taking a toll on its main market. Qualcomm now lower by 1.3%. First day out for Reformation Inc. That is a sustainable women's wear brand. It opened at its IPO price and its trading debut. Shares now higher by about 0.8%. And a sports note, UEFA's 55 member nations have resolved to boycott FIFA tournaments if President Infantino proceeds with plans to sell World Cup stakes to private investors. Recapping, S&P up 1.3%. The big story, though, the rebound in the stocks up now by 8.1%. That, Joe Matthew, is a Bloomberg Business Flash.
Okay, Charlie, thank you so much. And thank you for being with us here on the Thursday edition of Balance of Power. Welcome to Little Friday. You made it almost to Friday. We're live on Bloomberg Radio and on YouTube. Search Bloomberg Business News Live, the preferred way to consume this program. You can also subscribe to the podcast, of course, curated daily by America's producer. And you can find that at Apple, Spotify, or as we say, wherever you get your podcast. We've got some drama at the Library of Congress. It's not often we talk about the things that happen in the opulent library. But a pigeon has taken up residence, we understand, inside the Library of Congress's reading room. This is a big deal going on up there right now, because if you've ever tried to get a pigeon out of a library, apparently there's a lot to this. It's been stuck for 4 days. And the architect of the Capitol's got a team they put together here to try to get the bird out. Right now, they're trying to get it out a window. If they have to corral the bird in some other manual way, this could be intense. We're going to be keeping tabs on this. As I read this morning in Politico, back in 2011, it took a full week to get a hawk out of the reading room's dome. The Raptor Conservancy of Virginia had to be called in. Let's hope it doesn't get to that level. Almost as dramatic as the push and pull over AI this week in Washington, when Jensen and Altman have to get on planes to come here. Did you hear Sam Altman had dinner at the Monocle last night with Mark Warner and Tim Kaine? Do you think that's what he wanted to be doing on Wednesday night? They've got a case to make. Jensen was even in the White House yesterday talking to President Trump, and this is all about, hey, what are we doing here, guys? Are we throttling advancements just as we hold the lead in this race against China? He was not on camera when the president was in the Oval yesterday talking about his reno of Dulles Airport. The people movers we talked about. Jensen Huang's smart enough to stay off camera, but the president, of course, outed him. Listen.
When we're looking at AI, we're looking at the controls. We're also making sure that we lead. So we're leading China in AI, but China has virtually no controls. It's freewheeling. So we have to be careful in both ways. We don't want to restrict them, where all of a sudden we come in second to China. Whoever wins with AI is going to win. That's how big it is. So it's bigger than the internet ever was. It's bigger than anything ever was. So I don't want to restrict. I know many of these people. I don't want to restrict them from doing great work.
I don't want to restrict, as he's looking at Jensen Huang. He said earlier, I guess it was a different cut. He said, Jensen's here. He didn't mean Ben Jensen from CSIS, although I guess he could have been there. So it brings me to this letter here. 1,200 employees of leading AI companies signing a petition that they have called Pacing the Frontier. I've got the PDF, or otherwise I'd hold it up for you. Urging Washington to back an international framework capable, they say, of throttling AI development and advancement. Sam Altman talking to the White House about the need to pace themselves. So in the middle of all of this, and what Axios today was calling the prisoner's dilemma, we thought we would turn to the oracle of AI. When we need big ideas and we need to understand complex moments in this space, you know what we do on this program. We talk to Greg Allen, and he's with us now, I'm glad to say, in studio, the founder and CEO of Decision Tree Research. He's the direct strategy and policy at the Department of Defense Joint Artificial Intelligence Center. And it's always great, Mr. Allen, to see you. Welcome back to Bloomberg. What do we make of this pacing yourself? If that's the advice that is taken, does China take the lead?
Well, I think there's two big developments just in the past handful of weeks that are competing and pulling this administration in different directions. On the one hand, you have the recent news that an open AI model during cybersecurity testing escaped from its testing environment, hacked into a separate company, found exactly what it was looking for, and came back and told OpenAI, hey, I passed the test and I figured out what you were trying to get me to find. That really raised alarm bells about just how powerful these systems are today, how powerful they could be in the future. At the same time, you've got Chinese open source models that are not that far behind. These are really capable systems. And the White House has now accused Moonshot AI, the releaser of Kimi K3, probably the best open source Chinese model right now, of distilling that from the American systems. So on the one hand, you can look at these systems and say, yes, we need safeguards in place. Oh my gosh, if they can do that, we need a way of making sure that this goes well. On the other hand, if China doesn't have any such restrictions and they release it on a freewheeling basis, we incur all of the cost of regulations, but not necessarily very many of the benefits of regulations in terms of increased safety. And so this is the needle that the administration is trying to thread. They've got a deadline due in 48 hours here to come up with a new voluntary framework in which the government is going to review models before they're released. We don't know what's going to be in this, but it is probably going to be voluntary, which says companies, if you'd like the government to check your homework and make sure that this thing is secure from a cybersecurity basis, you can do that. But if you're concerned about competition and you want to just release, you can probably do that too.
So were these trips successful then? It sounded like maybe not, at least for Sam Altman. And do Altman and Jensen agree?
So I think you can point to a few areas where these conversations that Altman, that Jensen Huang is having with key stakeholders and moving the needle. One quote that really caught my attention was Senator Mark Warner saying that perhaps the open source genie is out of the bottle. As in, if there was ever a moment in which we had such a significant lead over China that we could use that to solidify the safety regulations, solidify the procedures, that window may have closed. And so now we have to make decisions under the basis of Chinese near parity on these types of systems. Again, this all comes back to the fact that on the one hand, there's a lot of really high quality companies in China with bona fide AI geniuses. On the other hand, why are they doing so much better than the American open source community? And there, I think it's pretty simple. The American open source community is respecting the intellectual property of OpenAI, of Anthropic. The Chinese ones are not. And that's a permanent advantage if you can distill these models, squeeze all the intelligence out, and give it away for free.
This is an argument against open weight models. And I mean, your opinion on this. Do you think they should be open?
So I think there's two debates. One is, should we ban open weight models at all? And the second is, should we ban Chinese open weight models? And these are separate questions. The cadre of people who are saying we should restrict open weight models writ large, it's not a very large community who wants to ban these. It's really a niche, almost fringe policy community. Where there is some real debate is about how we should restrict open source models once they reach a certain capability threshold. So some people are saying, oh, we should regulate closed source. We shouldn't regulate open source or open weight models. But just think about what that might mean for 1 second. If a company says, hey, I've created an AI model that can generate child sex abuse material, but don't worry, it's open weight. Has that actually assuaged your concerns at all as a regulator? So the point is, if you're creating models that can do bad things, whether that's child sexual abuse material, whether that's cyber offense type capabilities, you do need some restrictions probably to apply, whether it's open weight or whether it's closed source. The second debate is about these Chinese open source models. And there the real question is, look, if they're just stealing American IP that cost hundreds of billions of dollars to generate and then trying to give it away for free, well, yes, some people are going to be happy that they're getting that for free, but is that the kind of incentive structure that we want to reward? And do we have the tools available? I think Anthropic, OpenAI, the argument they would make is, look, China could just start looking at all the pharma companies too and reverse engineering those drugs and selling generic versions for pennies on the dollar. The way that we protect our pharma companies is by threats of sanctions, by threats of entity listings. That's exactly what Treasury Secretary Scott Bessent was set on the table to protect our AI intellectual property. So that's kind of the debate we're having right now.
All right. Talk to us lastly about the debate on Wall Street, because the markets are more confused than ever. Manic. In fact, there's been a massive AI unwind. And every time we hear CapEx, and there's any number attached to it that's higher than what we expected, this market falls out of bed. There's a huge concern that the spending's about to fall off, that the crunch and shortage of memory chips is about to dissipate. Is there any reason to believe that? Is anyone actually pulling back?
So I understand these market movements are a big deal for folks like who watch the show, folks like yourself. But let's just keep these things in perspective here. When we talk about big market movements, a big market fall, we're usually talking about a 5 or a 10% drop, which, don't get me wrong, that's a real movement. But Micron stock went up 700% last year. Okay, so we're talking about we've reached the summit of Mount Everest, and now we've gone down a few paces. We're still up very, very high in terms of where these companies are and how important
Is the skepticism justified, though, that we're feeling right now?
So I think it comes back to what we were talking about when you and I were talking about some of these IPO valuations. If you take a claim like that of Google DeepMind CEO Demis Hassabis, where he says that the AI revolution is going to be bigger than the Industrial Revolution, 10 times bigger than the Industrial Revolution, and 10 times faster, I would say that has to be true in order for these valuations to make sense. Not just 10 times bigger, but also 10 times faster. And I think AI is a legitimate revolution, but that's a lot to bet trillions of dollars on.
You heard it from the man who knows, Gregory Allen, Decision Tree Research. Thanks for crossing the river to talk to us, and stay in touch, of course. We're live in Washington on Balance of Power. I'm Joe Matthews. Stay with us right here on Bloomberg Radio.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ, all pushing higher. The big story, though, tip buyers coming in to scoop up semis. The stocks, the Philadelphia Semiconductor Stock Index, up now by 7.6%. That's helping lift NASDAQ and NASDAQ 100 Index. Right now, we're looking at a 2.4% gain for NASDAQ. For the NASDAQ 100 Index, an advance of almost 3%. S&P, keeping it all in context, up 1.2%. The Dow, meanwhile, higher by 427 points, up 0.8%, making up some of yesterday's sell-off. The 2-year, 4.21%. We've got the 10-year at 4.65%. The 30-year, 5.20%. Gold, meanwhile, at $4,110 the ounce, up 1.1%. A retreat for crude, down 0.7%, 83.87 a barrel. And Brent right now at 89.45, down 1.4%. Wall Street certainly has lots of questions today following yesterday's news conference with Fed Chair Kevin Warsh. Bond yields are at a 19-year high. Investors are betting that Warsh is only delaying an inevitable rate hike. Seema Shah is Chief Global Strategist at Principal Asset Management. And on surveillance this morning, she told us it's all about credibility and independence.
Go back 3 or 4 weeks, I think the market had finally started to discard this idea that the Chair Walsh was going to be the mouthpiece for President Trump. I think fast forward to today, and those question marks are back. Does Chair Walsh like keep rates unchanged because that's President Trump's perspective? I think there is a question. I think it needs to be dealt with.
Seema Shah, Principal Asset Management, interviewed on surveillance. Starbucks higher after earnings. Starbucks shares up by 3.4%. Chipotle Mexican Grill shares are surging after the restaurant chain reported comparable sales for the second quarter that beat analyst estimates. Right now, Chipotle is up by 12.4%. Here, Cava Restaurant, the Mediterranean chain, up now by 0.3%. And Yum Brand says its Taco Bell business is starting to recover from the Cyclospora parasite outbreak linked to tainted lettuce that crimped its sales. Yum right now up by 3.4%. Amazon, Apple report after the close of trading. Back to Matthew, this is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We look forward to hearing from Apple and the rest after the bell. And we'll have a lot more on the late earnings when you join us for the late edition of Balance of Power. 5 p.m. Eastern. We do this twice a day around here on Bloomberg TV and radio. Ed Ludlow will join us to start unpacking results as soon as they are out. We'll be tracking the stocks in after-hours trading as well. Thanks for being with us here on the Thursday edition of Balance of Power. We're live in Washington. My thoughts today are with the great broadcaster, Mike Girardi, who we lost yesterday. The reason why I got into this business, Mike Girardi, we lost at the age of 86, a great inspiration to me as a young guy. My thoughts are with his sisters and his children and the good people at the great WINY radio in Putnam, Connecticut, which for me as a kid was the dream factory. Wouldn't be able to do this today if it weren't for Mikey G, the Bumblebee. High drama on Capitol Hill. We talked to Senator John Kennedy of Louisiana on a late edition of Balance of Power. If you did not see or hear that interview, go to YouTube, go to the website, and spin it back. He described politics in Washington right now as happy hour at an era. It's a food fight. And now we understand Todd Blanche, the president's pick to be attorney general, who's actually the acting attorney general, just lost his confirmation hearing because of the gentleman from Texas. Be careful who you cross, the president.
Netflix attacking yesterday's highs.
Who sits on the Judiciary Committee, that which would clear the Blanche confirmation, says, no, I'm not voting on anybody until I see in writing, I want it on paper, as he says, a promise that there will be no anti-weaponization fund at the White House. Very simple stuff. They could have given this to him yesterday. Tom Tillis, by the way, wants the same guarantee. This is your YOLO caucus at work, right? President primary John Cornyn, his political career is over, and so he doesn't care anymore. And his colleague John Kennedy from Louisiana understands.
God, I hate Bloomberg.
If I were Mr. Blanche, I would give Cornyn what he wants. If he doesn't, he's not going to be confirmed.
S&P turning back up.
I'm not saying I agree with Senator Cornyn.
S&P turning back up.
And he's not backing down.
Not backing down, and so here we are. Now, this is the interesting part. If you read the reports, the DOJ actually gave John Cornyn something in writing, but it wasn't good enough. A DOJ official granted anonymity to describe the negotiations, said the department sent new language to both senators and remains in discussion. So they offered some sort of half measure indicating that the weaponization fund is still alive. Love to know this. And if they are talking, could this be saved in the next day or two? It'd be pretty easy to give John Cornyn what he wants. Let's ask our political panel. We're joined right now by Rosemary Becky, founder and president of Jersey First, our Republican strategist, and Doug Farrell, Democratic strategist, principal at Maywood Strategies. Great to see both of you here. Doug, you've been around Washington a long time. What do you think the DOJ sent John Cornyn, and why is this so difficult to put in?
Well, I don't know what they sent, and I think it's clear that Blanche and the White House are unwilling to relent on this IRS provision.
All right, just watching Netflix here, looking pretty good.
Favorite by standing its ground on this. This is super politically unpopular.
Okay, Netflix. Do I want to take any Netflix off?
That's what it is.
Netflix.
And, Blanche and the White House really made a mess of this and really exposed that it's really the president's personal interests that he's putting before the country. Blanche even described himself as Trump's lawyer in his own hearing, which, goes in the face of kind of the concept of the Department of Justice representing the American people. Look, we are in a dark place. Nixon sick the IRS of his enemies, got impeached for it. Now it's a Watergate every day.
I don't know about every day, Rosemary, but we do have an attorney general who's waiting for confirmation. Wouldn't it be with the administration to just close this formally?
So yes, you would think, you know, and I don't think it's surprising at all, the position that Senator Cornyn has taken. You know,
Okay, let me change channels here. These guys are nauseating, to say the least.
Giving the White House some good advice here.
I should mention, by the way, you're just reminding me of that amazing backdrop. Jersey Mike's is indicated to open at 22.25 to 22.75 here. Any moment, the IPO price 23, so I don't know. Rosemary, I know you got a deli to go see, but Wall Street's going to Jersey Mike's today. What do you think about this? Doug, you know, President Trump could keep Todd Blanche in this position on an acting level as long as he wants, right?
Sort of. I mean, there's regulations and rules that determine 200 plus day clock, and then there's also a particular carve-out for the attorney general to stay on, or a deputy to take control. So, you know, if they can play with the rules, I don't think their Republican House or Senate's going to call them on it. But, you know, it's not as easy to be an unconfirmed acting attorney general as it is to get that confirmation. It protects you politically when you're confirmed, and it also matters in court and makes the strength of the lawsuits that you bring or the defending you do of government policy stronger in the eyes of judges when you're a confirmed attorney general. So there's some downside here if he's unable to confirm it.
Really interesting. Rosemary, this is an issue, I suppose. But it's also an example of the president finding a line on Capitol Hill. How difficult can not just these two, Cornyn and Tillis, but also Bill Cassidy, who's funded it? How difficult could they make life with a Trump agenda?
We'll just keep a ceiling on these names. And so I want to respect the market and don't want to fight it. I'm still in it, but I refuse to follow because I don't think these are going to be great performers the rest of the year.
Private credit either. Fundraising has slowed and it's clearly going to be more challenging over the next couple of years, and not being able to continue to fill that till at the same rate is going to create questions about appropriate valuations for these names.
What about SoFi? Let's look at that stock. The target got cut today at Mizuho, 22. It was 29. Well, what are bears saying and why they could be wrong? Why they could be wrong? Incremental margins remain strong at 31%. So that no upside margin reflects a deliberate investment in new high potential lines. You own the name. What do you think?
Yeah, this stock just turned in a stellar report card, in my opinion. 40% revenue growth over last year, and the street is still treating it like it's the old student loan company 4-ish years ago that was a one-trick pony. I mean, they've got very deep relationships with their customers.
All right, Netflix looking pretty good. Netflix.
Increase the number of products each customer uses significantly. And so I think there's a missed opportunity here. I think there's probably still some overhang, though, from that short report for Muddy Waters.
Okay. What about CBRE? The target to 175 from 168. Outperforming Evercore. You own that one.
Was he watching the show yesterday? Because I said it should go to 175. That was
Maybe Analyst was.
Yeah, they have great numbers. I mean, they're growing 5 consecutive quarters of earnings growth, well over 18.
All right, S&P turning back up, looking pretty good.
All right, we have the setup as well. I know,
Still need to get back above the 50-day, but look a lot better.
This is like the holding of mine that I worry least about. If you think about trends for live entertainment, it's the same thing I was saying in an earlier blogging show about the airlines. It's bulletproof, and this is the best operator in the space, and they have all the mind share, the best facilities, the best shows, the best tours. So I don't go into these earnings reports worried at all. It's just a question of how much expectations have already been built in. In the case of Live Nation, it's had the pull the chart back. It's had an incredible year once again under Michael Rapino, and I expect that to continue as far as the eye can see.
We could be getting closer. In case you get
Still in the lower half of the Bollinger Bands on the S&P.
the fact that they did fail on their deliverables here at the New York Stock Exchange.
Frankly, but I did mention it in the break. There's 2 folding tables loaded with sandwiches. There's a whole line of traders just take one after another, and I'm sitting here talking about Reddit. I don't even know what's going on. It's so not like me. I should have ripped the mic off.
again, we're waiting on the first trade just in case you do hear that bell go off. We'll be fine.
Okay, hope everyone's having a good evening. I will be off tomorrow. The market's cooperating nicely, so if you want to reduce your risk with all this negative gamma, it's giving you an opportunity to do as much. I can only speak for myself. I had way too many chip positions in NVIDIA. I did offload Micron a couple of weeks ago, I guess. NVIDIA, AMD, Broadcom, Intel. What else did I have here? Oh, and SOXL, too much exposure to one group that has the potential for pulling back. Not the best situation. So I had a couple of things I took off for a loss. Micron was flat to lower. Everything else looks okay, I guess. It's just me personally, I just wanted to reduce my risk because I'm looking forward to the fact that we got midterm elections November. And there's going to be a lot going on between now and then. Of course, the Iran conflict, not the best situation. That's crude oil is fading. USO, I should say. USO fading. Crude oil. I'd like to see this fade a bit more, so gas would be a little bit less expensive. Basically, crude oil, you see VWAP here on the left, flat price action. We're sitting on top of 50 today. A move lower would be excellent for crude oil. Let's see, Core 1M. I'd like to see this. I'd like to see this much higher. We're back down to 8 and change. I'd like to see the 10-year yield lower. That would be good for IWM, US 10-year. I'd like to see the 10-year lower. Back off from here. And junk bonds, I'd like to see junk bonds higher. So at the present time, I'm trying to reduce risk. That's all. So junk bonds, if that moves back up towards the 50-day, that would be a big, a good deal here. Junk bonds. We're forming a base. Last week, Thursday, Friday, we had doji. As I was saying, that this looks like they're not really participating. The investors that would buy junk bonds or sell junk bonds, they're not very active. The volume was so-so. Not like over here back in March when we had that nice rally. So this is telling me that these investors are risk off neutral at the moment to slightly bullish. If this starts to move higher, we might see some more activity, some more volume is needed. All this is leading up to my desire to reduce my exposure in chips. That's all. Everything else looks fine for the most part. Let's take a look at sectors. Sectors are looking okay. Technology's up, but everything else is down. Healthcare, real estate, consumer staples, communications. That's because of Meta. Communications heavily affected by Meta. It's being offset by Netflix, which is good. Netflix pushing a bit higher. We need Netflix to move into the, we already took out the gap, right? We've moved into the gap. Now we need to move above the 21-day and start to head for the 50-day. Stocks that are moving today. Lots of tech, lots of tech. AMD off the best levels of the session. Okay, NVIDIA. NVIDIA's off the best levels of the session. Micron at the highs, pretty close to the highs, so this looks good. SNDK, STX, Seagate, Western Digital, all these looking pretty good. NBIS. Again, that looks pretty good. NBIS. Bounce. What's AT&T doing? AT&T gapping down. Are looking for AT&T to bounce. SoFi, the financials. SoFi having a pretty good day. Needed to get back above the 50-day. SoFi. Citigroup. Morgan Stanley. JP Morgan. The banks look all right. Goldman Sachs. So the dip's getting bought. PNC. MasterCard. Visa. Back to the telecommunications, Vodafone, Verizon, and AT&T. Those pulling back a little bit. So maybe they bounce next week. The 21-day is going to cross up through the 50-day. Netflix looking good. Netflix moving higher. Netflix.
Delhi probably in my local neck of the woods, but I'm willing to give Jersey, what is it called, Jersey? I don't act like you don't. We don't really have this. They're run out of town. They're getting really close, by the way. It could happen by the time we get off the air shortly after that. $24 a share? Yeah, well, priced at 23. I don't know what the range is. I can't see. 21 to 21 and a half. What's your final trade?
INFL.
Amazon. Yes, Amazon. Wow, Amazon's up 5%. See that? Maybe that's on expectations of a cloud number. Right? Well, we'll see. We'll count you down to it when I see on the closing bell at 3 the exchanges now.
The AI trade is soaring today, even as bond yields continue to rise, although Meta is in the penalty box. And Kelly Evans, and welcome to the exchange. A series rebound in the semis today. The SMH is up about 6% as SanDisk jumps 23. Is the momentum drawdown over now? We'll discuss that. Talk about why. Plus, Microsoft soaring 16% while Meta's selling off along with a raft of software names as the market rotates back into hardware today. And is frustration growing with new Fed Chair Kevin Warsh? Steve Leisman has some reporting on that as bond yields continue to rise, and Ed Yardeni says Warsh failed his first credibility test. But let's begin with these two big movers today. Microsoft's best day since 2008. It's up 16%, powering Dow higher, while Meta is one of the only AI names deeply in the red. It's now set to extend its losing streak, which was a record, to 11 straight days as its free cash flow dwindles. And according to Morgan Stanley, the drawdown in tech that we've just been through has been one of the worst.
Yeah, it's amazing. These earnings reports are now macro events. We wrote about this Monday where we had been coming into this week kind of hearing whispers about how AI spenders were going to kind of talk down their capital expenditure estimates, but in essence, we're seeing the opposite. So to us, it's a macro event, and we're continuing to see spend higher. And I think that's one of the reasons why we're seeing the trade kind of reverse back into hardware plays, because they are the dominant beneficiaries of this capital spending.
Yeah, who was it last time? Was it Samsung? Who reported and they said, that the shortages were going to last until, was it 2028?
Yeah, I mean, we are clearly constrained on the compute side. I did find it really interesting yesterday that neither of the hyperscalers wanted to give 2027 estimates, probably because what happened to Google last week. But I think that's a pretty good sign that they're likely headed higher in the intermediate term, that's for sure.
What does that do for the whole market?
Okay, looking good. S&P, Netflix continues to cruise higher. Let me see Netflix. What do I want to do with Netflix?
Because it's gotten so large. And so 60% of the S&P 500 is really trading on one factor now, and that is AI spend. And it's driving an overall nominal fixed investment boom. It's driving very strong S&P 500 earnings growth. And I think ultimately we will see equities move higher into year end to our target of 7,800.
So as we went through this kind of violent, some would say it's a momentum correction, it's a tech correction, it's both really. There were a lot of questions about, was this it for the whole kind of chip and memory trade? With the market
research report was better, but the companies are pretty similar and the results weren't all that different. move to happen. And you look at the analyst commentary, it's almost like the analysts are scared to say too much because you never know what's gonna like hold in these type of reactions. But Citigroup, the results are better than expected while the outlook is strong. Evercore, the results are better than expected on key metrics while the outlook is positive. Like they're sticking to just the facts because that's all we got right now. It's so volatile.
Yeah, and it's a good point. I mean, having already pulled back again today pretty substantially, even just from session highs, although at least eating away meaningfully at what was pacing to be one of their worst months in quite some time, as we are still down 31% for the month of July, but at least improving from the over 40% plus losses for the month we were seeing, and of course adding to now its 74% rally this year.
Let's not brush over that. We're up almost.
All right, S&P still climbing, Netflix still climbing, Google moving higher. I wanted to sell some more Google puts.
It's a great day, but for the most part,
Didn't get around to it.
the results are good and the stock's still down 30%. So it kind of shows that these names have been under tremendous pressure. The volatility is extreme, and just because it has a nice green day today doesn't mean that story's over.
It does not. And I would say that today it also helps that, I mean, like all of these names that are like KLA Corp yesterday got, I mean, absolutely smacked after its earnings. Now today coming back about 7%.
0 day, non-zero day. This level right here is just overhead, 74.35. Looks like we might get back to that level, 74.35, 98 percentile.
That's Microsoft. You have one of your biggest companies in your entire market making a, I mean,
Okay, starting to move into the more the white zone, if you will.
day for Microsoft, just like
Less wild swings in the white to purple area. We would expect less wild or volatile swings.
these fears that have circulated this company. The consensus view amongst analysts was that this was a prove-it quarter. Seemingly, it delivered on that. So revenue blew past forecast. We also saw non-GAAP earnings well ahead of expectations. Azure was the star, though, of the quarter, with revenue climbing in that segment 43% above expectations, faster than their prior quarter. Also surpassing $100 billion in annual revenue for the first time. Copilot adoption surged. Microsoft 365 Copilot surpassed 30 million paid seats. That was up from 20 million previously, and Microsoft Cloud revenue reached $59.3 billion. That rose 27% from last year. Their backlog also continues to explode, and I mean, outside of some of these themes that are working, it did seem right now like this was naturally compared with many of these AI spenders. The view is that Microsoft is showing, though, this clear evidence of monetization through things like Azure, Copilot, and enterprise software, while some peers are still spending very heavily naturally to, of course, be able to compete with some of that revenue visibility. And so that was actually of note. I mean, right now, with commercial performance obligations climbing 84%, signaling this long-term demand, but also the concern, obviously, being the fact that this was a definite a quarter of concern over like cash burn, for example. Actually, some of these metrics improved. They did spend roughly $41 billion on CapEx. That's not small, but all their infrastructure costs are still this major debate as they do continue to invest aggressively in data centers and AI capacity. However, while gross margins contracted, this reliance on AI demand is increasing. And so it's definitely evident that investors and its AI investments are
Toes in the sand. That's Zach Brown.
steepening our losses, like what we looked at with Microsoft now, or excuse me, Meta.
Yep. Got my toes in the water, ass in the sand. Ass in the sand.
Microsoft told the story.
Sorry.
Not just that we're not spending recklessly, we haven't bleeded our entire free cash flow, but they can point to, I think it was 30 million paid Copilot seats. They can point to, the numbers I've heard is upwards of half of their
Life is good today.
Okay, so they can literally say, hey, AI has been net positive in terms of generating revenue for our business. So yeah, we're investing in this space, but let's say they have $30 billion worth of revenue and they spend $120 billion roughly. That's 25% ROI. That's pretty good on the investment already in the first couple of years. So you look at this and you say, okay, Microsoft is given the street the playbook. Now the tough part is, and this will tie into the company we'll talk about next, is not every company can tell that story yet because they don't have the revenue to really show for it just yet. But to put into context, as you said, it's not quite $500 billion worth of market cap, but it's like 490. I think if my numbers are right, if Microsoft gets up just over $67 on the day, we're going to be talking about $500 billion that was created today. To put into context, our next name we're going to talk about is plunging today, and is also a mega cap hyperscaler. It's down 9.2% in the case of Meta. It's about 135 billion.
All right, watching Netflix climbing.
By a factor of 3 today, just to put in perspective how big Microsoft is. Maybe one of the biggest of all time.
I know. I'm curious if it's going to rival the, of course, like market cap value we saw added the day that Oracle climbed. I believe it closed up today like 37, 39%.
Okay, S&P at trying to get back up to the highs. S&P 500. Cerebras looking good. Cerebras. S&P 500 at the highs of the day, above the opening range high.
I mean, that is just insane. And also just put into context, like, that shed a substantial amount last week, but I mean, it was like the size of like Palantir. So we're talking like, again, a few hundreds of billions of dollars at least, but not quite to the scale that Microsoft is, I mean, naturally adding today. And so a really impressive move and a really, I think, welcome sigh of relief for those that have been holding on to this name while we've seen a bit of a underperformance.
Okay, Microsoft pushing a bit higher. Microsoft.
Which is the somewhat inverse of what we're talking with Microsoft. That's Meta. Meta Platforms, although not making as big of a move, obviously this is still a notable drag on. Right now would be even
LRCX up 18.5. LRCX, there was some big trades on LRCX yesterday. Gapping up today. Beautiful.
What went well, what did not go well. Very clear to say that this name has seen, I mean, still really nice figures of growth, and actually some of their numbers are improving, like revenue, for example. But overall, what the headline really number, I think that was the concern was you miss on earnings. I mean, this is a company that there's so much riding on. I mean, like what they're doing with AI infrastructure spend. This was a big miss. $6.18 a share versus the $7.10 expected. Not even really close. Revenue, though, surpassing forecasts more modestly so, and also did mark about 30% growth from last year. But I think that anytime you have, again, a number that misses that substantially, that's significant. Now, some of the other positives were that ad revenue climbed another 27%. Daily active users plunged up about 3% year over year to 3.6 billion, and their guidance was, I mean, slightly below the expectations at the midpoint for third quarter revenue, but wasn't necessarily, I mean, a huge weak spot. But AI products are also beginning to monetize. They did mention this growing adoption right now they're seeing of Meta Business Agents. More than 1 million businesses using them weekly, they said. Revenue guidance does still imply some solid growth, but I mentioned more modest than had been expected. But I think that you can read that two ways. Guidance still objectively was light. So triggering also some of this negative reaction. Expenses also exploded. Total costs and expenses climbed 55%. Operating income also fell another 8%, and their free cash flow collapsed. It was just $784 million, down dramatically from $8.5 billion just a year ago.
Yeah, one of the things that seems to be a theme amongst analyst commentary too when it comes to Meta is that not only are they spending, not only are they bleeding free cash flow, not only was their margin a little bit questionable this time around, revenue growth still fine, but it's that they can't really tell the story. There was like no opaqueness to what they're spending all this money on. And they had nothing to show, and maybe this wasn't the place for it, but there was no real update on their frontier model. So when it comes to these tremendous numbers that they're throwing at AI, they seem to be, of all the companies, the one that has the least to show for it, and no real meaningful, and I'm sure they have a plan, but no real meaningful story that seems the street feels confident they can give them.
It's true, and I would say that that's a good way to summarize it. And so that's why we've seen this pressure today. I will say that we are still, I mean, in Meta Platforms, I know we talk a lot about like a 20% nearly contraction this year. Today is obviously not the move you want if you are bull in this stock, but we're still at least now closer to lows, but we're still off yearly lows by about 2%. So it's been a substantial decline over the last now 12 or so months, but we have not hit new 52-week lows quite yet today. We'll keep on watching this.
How we can get on a run? What was it?
The 20-day run?
There you go. So if we see one of those, we maybe get back to where we were last week.
I know we needed a year of efficiency type of earnings call that it did not seem like that played out quite as it has in years past. Because we really were on, I'm talking about the ultimate run post the infamous call of year of efficiency earnings call. But Moving on here from Meta, lastly, looking at the move that we were seeing today in Chipotle, which is another name that has seen a very different type of price performance from this company that we've known historically in the years past. Now up 12% though, as it does seem like this was enough to reignite some expectations of growth. Today's move pushing shares now higher this year, eating away at some of its losses as we pulled back about 13% now from highs, but also firmly positive this month now, up over 13% for the month of July on what was still a pretty mixed bag as far as earnings, but they exceeded forecasts for at least their top and bottom.
All right, just watching LRCX, S&P 500 at the highs. Okay, Snowflake turning up.
But same-store sales finally returning to more healthier growth. Comparable restaurant sales increased 2.2%. We got customer traffic also improved. Transaction grew around 1%, showing customers are returning to growth rather than growth being driven solely by just increased pricing. And guidance was also raised. They lifted their full-year comparable sales guidance to roughly now flat to low single-digit growth, and restaurant expansion also just remained relatively strong. Some of the still turbulence of this quarter, margins continue to compress, operating margins to decline. Protein inflation remains a big problem, with things like beef costs, for example, being a big driver of margin pressure. Freight inflation also did weigh on their results, and labor costs increase, as well as some of these major food safety.
SK Hynix at the highs. SK Hynix decided to hold on to this one. Pretty volatile, but I have March 150 calls.
Did say this was something that they could see reducing their July sales by roughly,
And some spreads above that. SK Hynix looking very strong here.
given some of the headlines we got from Taco Bell earlier today.
Yeah, I was hoping you were going to try to say the name of this parasite.
No chance.
I'm going to pass on it as well, but we know what we're talking about, I think, when we're paying attention. 200 bip impact to sales, they said, for the current quarter. So that's pretty incredible. That's a massive move, but hoping it's a relatively short-lived issue, and then we'll get back to normal. Combine this with Chipotle, some of these names making a little, Starbucks, a couple of these names in this sort of fast food, fast convenience space, making some nice moves today.
It's true, and you're right. And I think also it's encouraging to see some more stabilization throughout the entire food category space, really, through this month, even though I know food inflation is its own separate story. But hey, I can speak to the health of Chipotle because I've eaten it probably once a week for the last 2 or 2 years. And hey, I haven't gotten sick yet. So knock on wood, but the testament to their lettuce seemingly is clean at this moment. But we'll leave it there for the top of our share today. Now, coming up next, we will look at some ways to trade both Coinbase as well as Roblox. These names, of course, some next-gen favorites. We are seeing a bit of a contraction in Roblox today, down about 3.2%, whereas Coinbase today up about 2%, up to now an 11.5% move so far this month.
Okay, there we go. SK Hynix breaking out again. Okay, breakout again, SK Hynix. Okay, high of the day. High of the day is right there. Coming up to that right now.
Download the Schwab Network app and stream live coverage wherever you are.
Intern, this place is incredible. It's like, wow. So, that's why we have best trade, closer to management.
Trump. Whether you're a bull or a bear, you want to catch the latest market action on morning movers with me, Diane King Hall. Welcome back to Next Stretch Investing. It's that time to talk to you. Of course, plenty into that like next generation of gaming as well as the next generation of some of these ways to, of course, get into the crypto space, being Coinbase actually. But joining us for a fact to look at some of these technicals is Ben Watson, our chart master today. And so Ben, let's start off with Roblox. Roblox was at one point like trying to be like really one of the first like true AI types of stories. I'm not sure if they've necessarily even deemed that, but I do remember the days when they were trying to coin that as their phrase. That being said, Roblox has seen a bit of a different year, of course. We pulled back nearly 28% so far in 2026.
Yeah, Jenny, you're right. It has kind of maybe come back to earth here a little bit and built a base down here around that $40 mark or so, finding a bit of support. Earnings to earnings, it's really been largely sideways. And going into this next earnings announcement, investors perhaps hoping that there's not a big oof here. But you get resistance overhead around the 52 mark, maybe that 64 level is a symmetrical target if it breaks out of that range. Sitting right on the 50-period moving average at the moment, right about that 48 level. Now, that becomes kind of a key, perhaps, support resistance area. There's a bit of a support right around the 45 mark in the last 2 or 3 weeks where we got a bit of a bounce. But momentum is still negative at the moment. And starting to roll back up a little bit, not necessarily gaining much strength. Planned volatility pretty high here going into this earnings announcement, though, Jenny.
Okay, I mean, speaking of volatility, my platform was still updating. We're actually down about 40% this year, not the 28% I was previously seeing. And so that makes things a little bit different. And obviously pulling back around 11% now this month. So when we now think through trading this day here, for example, purposes, Alex, we are down about 3.5% today as well.
Yeah, looking at Roblox, elevated implied volatility has been said, and looking at selling some premium below the market in a risk-defined way using a short put vertical spread. Now, you could look to tomorrow's expiration, but for our example, going out to the end of next week, give it a little bit more time. The August 7th expiration, it's the 45.42, so it's $3 wide. If you collect $1, it creates a 2-to-1 risk reward.
Okay, S&P is still pushing a bit higher. SK Hynix hit the high of the day again.
$1, and then max loss potential, of course, would be 200. That's 2-to-1 risk reward. Does the math makes it a little bit easier for us, Jenny, because $3 wide, collect $1. Well, that's a third the width of the strikes on this. But neutral to bullish, selling some elevated implied volatility, looking for stable or higher post earnings, and you got a week for this stock to be above 45.
Okay, and obviously pulling back pretty notably today. But now our next name here today, Coinbase, a very different story. Obviously, a lot riding on this Clarity Act, a lot riding right now on some of the legislation, really efforts that are expected to at least go through. But we'll obviously have to see where that is and where some of that stands. But there are still like major pieces of law that need to go into place to see, I think, up next, further leg up for the entire crypto exposed space. But to not get ahead of ourselves here, Coinbase is at least having a nice day today. Now, this name has pulled back about 20.
SK Hynix at the high of the day getting rejected.
Jenny, this is one of the things that I talked about in my Monday morning basic cryptocurrency webcast. And one of the things you have to note about Coinbase is that it is remarkably sensitive simply because of their business model to the price of specifically Bitcoin. Now, that presents some risks because of those regulatory challenges, because of developing technology challenges and so forth, and simply the cost to produce Bitcoin makes really kind of puts in an artificial floor here. That floor in Coinbase, however, sits at around this 138. Now, not that could not be broken. That's not an impermeable support level, but it tends to be an area where price drifts to, and has over the course of the last 3 earnings announcements, kind of moving back towards that 138. Momentum is falling off a little bit, implied volatility already starting to bleed out of this name ahead of that earnings announcement, and really kind of falling below that 50-period moving average. So perhaps a little bit of sideways to drifting bearishly The one mitigating factor is the fact though that Bitcoin at the moment is up just a little bit, and that has an influence here on Coinbase.
Oh, definitely. And Coinbase actually is.
All right, Netflix fading a bit now. Broadcom moving back above the opening range high.
2%, so really trying to
Microsoft hanging in there. Microsoft.
Watson, always bringing all the
High of the day. Microsoft.
earnings events, which are both
Right there is the high of the day.
And so now, as we do think through trading Coinbase here, you know, there's obviously a lot of different conviction. I would say that your conviction on the overall crypto asset class would be probably very heavily tied to Coinbase. How could it not be? Hasn't really made the same type of AI play that we've seen from a strategy as of late, for example. But that being said, say that you were a bit more of a skeptic and looking to lean in a bit more of a cautious stance on the entire crypto and Bitcoin space.
Yeah, I mean, the thesis here, I think, could be simply that Bitcoin tends to be an asset that drives FOMO, it drives excitement around volatility, but particularly upside volatility. So, being a business, more interest in crypto and Bitcoin in particular, and the kind of ancillary other coins, maybe that just isn't there. So, if you're bearish Coinbase, you don't think the results are going to be very good, there's going to around 140, 139, and 138 in that range. And so what I looked at here was selling next week's 138 put, buying the following week's August 14th 138 put, with the idea being if it does test those lows, maybe it overshoots them ever so slightly. And if you spend $1 on this, you'd risk $100. So it's a strategy that's like throwing a dart. You're picking a spot that you think the stock's going to be really by the end of next week, but perhaps just after earnings as well. And look, it's the bearish look at it, but that doesn't mean that you have to be bearish. If you're bullish the stock, perhaps a similar strategy with an upside target could make sense as well.
Okay, yeah, and I like that. A good way to play into, of course, just the different convictions, obviously, in the broader crypto and Bitcoin and Coinbase world, because obviously Coinbase, even though it's an individual equity, does have that vast exposure to some very critical pieces of, again, law that we have to see passed before I think we can see the next major leg up in this space, but something to keep on our radar there. But coming up next, we will discuss Amazon reporting after the bell, and expectations are high, especially after Microsoft's blockbuster cloud results. So can AWS keep pace? Is the street missing the most important parts of Amazon's growth story? We're getting set for the reports with all of the expectations right after this break.
For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets. Follow me on X at @NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Have you ever watched an interview and thought, I wish they had 5 more minutes, or I want to know how they discovered that hidden gem? That's exactly where Market Matters comes in. I'm Marley Caden, and our podcast is slowing things down. We're going beyond the earnings to get to the heart of the people and companies driving the global economy. If you want the full story, not just the headlines, Market Matters is for you. Subscribe wherever you get your podcasts.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Hey, Bob. Hey, Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable. Wait, had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time. Jim, my financial consultant. I probably met 20 years ago. Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Welcome back to Next Gen Investing. Now, Amazon just reported after the close, investors focus on three critical questions. Can AWS continue to see recent acceleration? How much more AI-related spending is ahead? And when will those investments start really flowing through their free cash flow? So joining us now to help us make sense of all of it is Mary Jane Matz, Director of Large Cap Equities at CS McKee. And so thank you so much for joining the show today, Mary Jane. Microsoft just delivered a pretty major read-through for AWS with Azure growth accelerating pretty substantially. So what does Amazon really have to show tonight? What are you watching in this report?
That's right. I think you've teed it up pretty well. Thanks for having me. You know, the Azure numbers last night out of Microsoft beat expectations, 43% revenue growth. A lot of commentary there that indicates that AI demand remains exceptionally strong and that their backlog is still, up considerably. I think you want to hear something similar to that from AWS. It's the key driver of the growth story for Amazon. The retail side tends to get a lot of focus because it's 80% of revenues, but the real driver there is, as you've said, the AWS side.
Hard to disagree with any of that, Mary Jane, but it seems the market looks for a little bit more recently. I mean, Alphabet's numbers were just fine, but the scrutiny around the spending, it seems like Microsoft, though, may have given other companies the playbook. Just show that you have a return on the investment and the street's fine with the spending. Is Amazon going to give us a story that proves the spending is going to the right places?
Well, that is the key investment theme here is what is the return on this investment and when does free cash flow, turn back to positive? I think it is somewhat short-sighted to expect that in these quarterly reports, we're going to have enough evidence to make that decision. I think we've got to give them the benefit of the doubt. And as we do at CS McKee, take a very long-term approach here to doing the valuation work on Amazon, what you're paying in terms of multiple points for what you're getting. But I think you're right on Microsoft. They did not increase CapEx. The market's very happy with that. Google did increase their CapEx and the market was very upset. So I think in the very near term, an increase in CapEx here for Amazon is going to be treated poorly. And I think that'd be an opportunity in the stock. It's a relatively new entrant for us in our portfolio. We're at about a half a benchmark weight in Amazon, and any downdraft might give us that opportunity to build the position.
Okay, so a lot of our focus just naturally is, of course, more on the higher margin engines that are like AWS, advertising, logistics. I always think the retail business is also interesting just from like a personal standpoint, but which of all of those businesses right now do you think is the most underappreciated by the market?
Yeah, the logistics end is very interesting. That's the Amazon supply chain services. And that could potentially be kind of the next AWS inside Amazon. It's an internal cost center that's being converted to a revenue source. In this case, there's very little cost to do that. So there's not a big CapEx burden. So we think that that's not getting quite enough attention on the street. And this quarter's report, there may be something in there that sparks that interest.
Mary Jane, I got a question for you kind of around portfolio construction and where companies like this fit in it. It sometimes seem these, mega cap liquidity sponges that I would classify Amazon of, maybe there's 5 of them that we all know. It's almost like they're owned. It's just, are you up to the weight of, kind of market benchmark? Are you overweight? Are you underweight? But it sounds like, as you said, this is sort of a new entrant. What was keeping you from having exposure to Amazon until recently?
Yeah, very recently, the Russell benchmarks reconstituted and reclassified a lot of these names into the value benchmark, increased the weight in the value benchmark for Amazon in particular from something under 2%, 1.6% or so, up to almost 6%. So it is now a very large portion of the benchmark, as is Apple and Microsoft. And for risk budgeting purposes, we've got to decide where we are relative to the Russell 1000 value, the benchmark. These were previously stocks that were predominantly in the growth benchmark. And, you know, whatever the performance was, wasn't directly impactful to us on a relative basis. Now they're in size in the Russell 1000 value. And in most of these cases, we're owning them. We find them attractive, but not attractive enough to work up to that large benchmark weight just yet.
Okay, and I like that answer. And we do know that they still have several of these newer initiatives like Project Leo, Tranium, and supply chain services. And so, again, which of those businesses are you most focused on as far as like these new initiatives that have these potentials to become, I mean, pretty meaningful to them over the next few years?
Right. The Project Leo is a satellite direct to device kind of business. It does have a very large investment component in it. And again, we get into the conversation, what is the return on investment and when will you see it? That's a little bit longer term given the size of the investment there. The custom silicon, the chips that sub in for NVIDIA's GPUs that are being rented by OpenAI and Anthropic and Meta, that business is growing extremely rapidly. And again, it's very high margin. It's tough to see it inside Amazon. If it were its own standalone business, you might get more of the value to be appreciated by the market. And then again, that logistics business is a bit of a hidden gem, we think.
I'm looking forward to the results regardless of ultimately where the stock goes. Almost a 7% implied move. It's moving nearly 5% here today. The volatility stock to stock is just incredible right now. Mary Jane, you know, one of my colleagues I was talking to earlier, his name's Kevin Gordon. He describes it right now as a duck market. Calm on the surface and the feet going real fast underneath the water. When you look at the big picture market at the moment, even on a day where we're bouncing back, we're doing it with about a third the stocks. It's very momentum driven. How do you anticipate kind of the next 6 months or so playing out? More of the same?
Yeah, you know, at this juncture, the earnings outlook is so strong that the market can kind of survive some multiple compression, you know, because rates are moving up. You know, we've just got to go down under that calm surface and find stocks where there's some controversy.
Microsoft taking off to the upside.
Near-term concerns like the issue about, you know, about free.
Microsoft with a nice move to the upside. For those of you long Microsoft.
Boom. So we've got all kinds of names in the portfolio. We're building positions like the Amazon, Microsoft, Apple, Google, Dell, Micron. We're finding ways to justify, if you will, the valuation that's inherent in those names.
Okay, really appreciate your time today, and thank you so much for joining the show. Great conversation, of course, ahead of what is a critical event for us all to focus on Amazon earnings. But Mary Jane, Director of Large Cap Equities at CS McKee. Now, coming up next, we will discuss the broader outlook that we are seeing for gold, with gold prices having pulled back from highs. But of course, we'll dive into some of the recent geopolitical uncertainty, central bank buying, and inflation concerns that can seemingly have not entirely gone away yet.
All right, Microsoft, a little push here, getting some people to chase and turn it back down. Liquidity grab. Microsoft liquidity grab at the high. Okay, S&P fading a bit too. All right. Let's see, SK Hynix at the highs of the day.
DT put strip.
Oh, she's got your smile, Carl. Yeah. Here to walk away. Little dependent actually when we invest with Schwab. They have everything we need all in one place.
I can set up for a college fund.
I've been learning about trading strategies. Schwab helps regenerate retirement. All this Schwab is everything you need is making me cranky.
Does somebody need a nap?
Invest your way with Schwab. Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Morning movers brings the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, morning movers only on Schwab Network.
Welcome back to Next Gen Investing. Now, gold has pulled back from its highs this quarter, but demand does remain remarkably resilient across multiple parts of the market. So for more on the asset class today, we'd now like to welcome in Joe Cavatoni, Senior Market Strategist and Head of Public Policy at the World Gold Council. So thank you so much for joining us today. Now, we do know that gold demand was essentially flat in volumes in terms of this recent second quarter, but the total value has, of demand really still hit records in the first half of this year. And so what does that really tell you right now about this appetite for gold, broadly speaking?
So what it tells us simply is that the resilience, like you mentioned, for the gold demand is still there. Higher prices, and as you mentioned earlier in the year, very high prices that was on record.
All right, S&P trying to bounce. All right, the New York Fangs look pretty good. They're holding up very well for tomorrow's trade. If we can hang on to this right here, this looks good. This looks really good. Only thing that's dragging its feet right now is Nvidia. Apple's kind of at the low of the day, right? Apple has earnings tonight, so it's off the lows of the day.
I've oftentimes thought of gold as almost like the break glass if necessary asset, like it's there, it's got a long running history. And sometimes I see it as, maybe it's a geopolitical hedge, maybe it's a hard money hedge. And look at sort of
Key factors that people need to take into consideration, but they need to be broader in terms of understanding its role.
Google trying to turn up.
Exceptionally, two major conditions that you have in the economy: creation, saving and spending, but also risk and uncertainty in markets. That fear tree that you talk about, the break glass and use when needed moment, and those two conditions often and historically have shown that gold has had record performance, or more importantly, performance in line with equities and risk assets over the long term. What we're really dealing with in today's environment, what we've seen over the last 24 months in particular, are exceptional conditions that have driven.
All right, S&P trying to drive a bit higher. S&P.
Move those prices much higher, much quicker than we anticipated, but settling back down as people are taking into consideration the Fed chair, what direction the policy will take us, and overall what they're looking for in their portfolio. A risk asset offset, the right kind of diversification to give you protection, but also growth.
More than 20%. Amazon
Zero
less
DT.
than 5% year to date, so might not be judged quite It's brutally conservative. Big question we keep hearing though is about a bubble. And Kevin Hassett isn't having any of it. The idea of AI spending bumping into a ceiling and leaving enormous supply. Building of data centers, the advancement of AI. Rick Steve actually joined us earlier today. On the course, the president's
So as we consider who is making money, who's spending a lot of money in the market, I'm sure is necessarily going to pay off. Look at what's happening in tech and AI plays overall. In tech host Ed Ludlow running us now from San Francisco. It's, of course, very busy week for him as he covers things across the board. And before we talk about the things that we're going to get in just a few hours, that we can recap the earnings we got yesterday. We're looking at the biggest move for Microsoft going back to 2008 with this 17% gain. Is this just a matter of the stock having been beat down somewhat? So now we're seeing a massive recovery, or is the cloud growth really that good?
Well, good point, because it's down year to date, the biggest technology. The other way I look at it is that if you look at percentage gain, but as we write from the paper, it's on track to have almost $500 billion in market value in a single day, which would be a record just on market value. No one's ever done that. But it's so interesting to get, like, you know, each of these companies, the math, the equation is the same. Here is some data of how much we're spending. And then the Wall Street says, what is the return on investment? What have you got to show for it? And in Microsoft's case, it's pretty simple. They gave financial metrics like their cloud computing unit growing at the fastest pace since 2022. But they also said, this is the product that we sell, Copilot. Use it. And that seems to have been a good message. Really good news. Just say it's a different type of news beyond financial news.
30 million seats. Microsoft, as we've been discussing, has been rewarded for not spending beyond its means. It's been rewarded for kind of not spending at all. Does that continue tonight?
Well, the Apple story has pretty much been like Apple is the safety. Apple doesn't. Its capex number is probably going to be $12 billion this year, maybe just slightly over.
Microsoft fading back in.
You know, Amazon's story is very aligned with Microsoft. You know, they expect the cloud unit AWS to run the fastest pace of time. But Amazon more recently has been doing these kind of investments. Is something 10 is the other side we've done. Not just in the research and development side of AI, but the company. So Amazon like Microsoft is more big, great. It really is a story about Tim Cook and smartphones.
And a little additional balance of power. Joined by the great Ed Ludlow. It's good to see that. So we're tech, of course, we have the voice of Bloomberg politics contributor Patrick McHenry, of course. Committee speaker for Texas with us right now. Mr. McHenry, welcome back. I wasn't planning to talk to you about this. Audience should know you do a lot of work out in Silicon Valley now. You're a good player with the corporate space. You probably have a much questions about the durability of this AI build-out, race against China, and the questions of what inning we are in here. So we've seen a large shift
this calendar year, distinct from what we saw.
Microsoft turning back up.
We're ahead. This year, we're seeing a shift to bring competition on the frontier and and the rising use and need for open and open dates so that we have open to balance out this rising cost.
SK Hynix at the high. The top 10 stocks on the NASDAQ 100, NBIS, SNDK, CoreWeave, Micron, LRCX, Microsoft, Applied Materials, Western Digital, AMD, LITE, Lumentum, Teradyne, and Marvell. Nice group of stocks. A lot of tech on the move today.
Debate within the parties and with the electorate, not just for the midterm, but going into the next presidential, it will be a defining issue. Debate between the candidates.
Okay, so technology is up 5.25% basically. Consumer discretionary, that's being helped by Amazon and Tesla. They make up almost 50% of the weight of consumer discretionary.
Been a lot of reporting about today. This was a hedge fund started by a very young man who used to work for OpenAI. And Bloomberg is now reporting, a red hedge just crossing the terminal, that its assets have fallen to about $10 billion after having to offload a bunch of its stock in a sale to Citadel. CNBC had reported earlier today that the assets as of July 1st, or the net asset value rather, was $45 billion. So clearly this is a material drop after the losses that they experienced with some wrong way bets on software names and AI.
Yeah, that's for sure. It really speaks to just the incredible amount of leverage that's been in these trades. I mean, look at Micron today, one of the three top holdings in this hedge fund, just moving with the band. It's up $131, 18% now. Kaylee, maybe like silver faction yesterday, people are wondering what these breakneck moves are all about. And situational awareness raises its head as at least one of the reasons.
Yeah, a lot of attention on Leopold Oschenbrenner.
25 years old.
Yeah, and under a lot of pressure, I would imagine. As we bring the conversation though back to Chairman McHenry, as we have this conversation.
All right, SK Hynix at the high. Top 10 on the S&P 500, SanDisk, EME, Micron, LRCX, Microsoft, Quanta, PWR, Quanta, WDC, Western Digital, Applied Materials, AMD, Chipotle Mexican Grill.
In a different context, AI can run very hard and grow at a very large rate without the need for clear rules of the road from Washington. What crypto needs is clear rules of the road for mass adoption across heavily regulated financials. The Clarity Act is that opportunity on Capitol Hill to define the clear rules of the road in law on what is a digital asset, means of exchange, and its use. We see the Clarity Act having passed the House of Representatives over a year ago. Now the Senate has been wrestling with this publicly for the last couple of months. The final key issues for the Clarity Act are number one, conflicts of interest for the centralized exchanges. Number one. Number two, law enforcement, the clear definition of developer protections for open source software developers and DeFi. And then third and finally, and most importantly, politically, is the debate around ethics. You have serious policymakers engaged on that, on defining what is a set of ethics restrictions on the person of the president and elected officials. And you see leaders like Senator Gallego, Senator Tillis.
Okay. SoFi continues to drive higher. SoFi after that dip yesterday, SoFi looking better. Financials looking better. Citigroup, Morgan Stanley, JP Morgan. The big banks look good. They're bouncing. Trending, still above the 9 and 21 day in most cases. Okay, Apple turning up, Apple turning up. Apple with earnings tonight, turning up.
Isn't that true? I'm gonna play this for him. Tell him we had this conversation because the president wants his attorney general to be confirmed. Todd Blanche, that confirmation vote has been postponed because Silas and John Cornyn, both of whom not great fans, I guess, of the president and vice versa. He primaried them and they're giving him a hard time back. They want a piece of paper that says there will be no anti-weaponization fund before they nominate, say the nominee. In this case, President Trump posted on Truth Social, he might just withdraw the name over this. What's going to happen to Mr. Chairman? The senators would have the deciding votes here. They're not fighting directly. They're not saying that President Trump is. They're even going out of office. That's not something that can be. What they're saying is that the president didn't feel served by that is what they're here jealous. What they want is an assurance of the attorney general's specifically on the anti-weaponization front. And the attorney general in that process, you know, the general should get that assurance. In this case, it's going to be staff those assurances together. Until that time, we're not going to see a lot of.
All right. Apple turning up. Keep an eye on Apple. This looks pretty good. Going into earnings, Apple turning up. Doji. I would consider selling some put credits, Apple put credits. I know Schuster, you were looking at that yesterday, selling some put credits on Apple.
Mr. Chairman, thank you so much.
I would go 20 delta, maybe 15 delta, unless you don't mind getting assigned, in which case I go 25 or 30 delta. More than likely, we continue to move higher. I would go out a couple of weeks at least. I wouldn't be selling tomorrow's expiration. Again, I'm going to be out tomorrow. I'll be sliding back into the office on Monday. Sometime between 8:30, 9 o'clock, and I'd say 10 or so is a good time. I'll try to time it because their office doesn't open, Enterprise office doesn't open until 9 a.m. anyway. So I got to return the car between 9 and 12 on Monday. So the Sunday video will be out. The watch list will be out. And I'll probably, maybe I'll be on time. I don't know. We'll see. I'll try to time it so I'm back here around 9:30, 10 o'clock.
In the dreaded last equation, you're on your own. We do that. You do the same with our lowest price guarantee at Shoe Station and Shoe Carnival. Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
20 grand man is so incredibly valuable. Well, coming back. Things where you have things which are somewhere in the middle. 2, 3. This is a way to change culture.
Okay, Apple turning up, looking very nice here, Apple.
This season, business has never moved faster.
Well, mental and Roger saw that, who told me.
Okay, high of the day is a bit overhead. Opening range highs right there. So a nice return visit. Apple.
It's true, but it is gonna end. And the day it ends, the day before it ends, you want the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. It doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start in the third floor or the lobby. You actually have to start in the basement.
Apple, nice runner here, Apple.
And Tim Senebeck, live on Bloomberg Radio, television, and Bloomberg Originals. And a very good afternoon, everybody. Yes, indeed, across Bloomberg platforms. It's the Bloomberg Business Week Daily. Master Tim Senebeck live here at Bloomberg headquarters in New York City. I have to keep looking at these numbers. I'm kind of blown away.
Which one specifically are you talking about?
Yeah.
Microsoft.
AMD trying to push a bit higher. Nice reversal day for most chip stocks. S&P 500.
Which is something in my life.
Okay. Hedge flows are flat for the most part.
Not me, it's not me. Hey, Ira, come on in on this. Same question to you. Is it Alan Greenspan 2.0, or is it just figuring things out, or do you kind of agree with what we just got from Stuart?
And you see that very clearly in these statements where you have 115 words compared to 800. I think that the market's not going to be like this. Not because it doesn't provide, but the most of any of it. Because the statement and the market's not very profitable. He said, you want to fight inflation. Well, to the market, that's saying, okay, well, if you're fighting inflation, if they don't increase interest rates and you still have 3+% year-on-year PCE over the next couple of months, the market's not going to like that. You're going to see more of what we saw yesterday. See high yields in the long run because there's going to be a lack of trust in the central bank. How high could that yield get? Well, and so it'll be difficult for it, I think, to break around 5.5%, but that would still be, the highest level in almost 2 decades. So that is a scenario where you have all of these hyperscalers and just about everyone who issues long-term debt is going to find it harder to borrow, or at least more expensive, right? And whether or not they're immune to higher interest rates or not is yet to be seen. But it's presumably it's the long.
All right, watching. S&P is just sitting here.
U.S. mortgage rates already rising to a 12-month high, amid, some of the fighting in Iran, feeling concerned about higher inflation, but it's just kind of the general macro.
Stuart, is there a real case to be made that it's not really within the Fed's remit to communicate with us at all? I mean, this is an organization that is responsible for 2 things: maximum employment and stable prices. Not explaining itself to us, 8 times a year.
It's certainly not obligated to explain itself the way that it has been. It's certainly not obligated to provide authentic guidance is useful in achieving those 2 objectives: price stability and maximum employment. I think that,
And it's worked, right? Has Fed speak kind of like so much well, just Fed speakers in general kind of maneuvering the market. Yeah.
look, I think that it has worked. I think that communication is a tool.
S&P. Okay, here goes Microsoft. Microsoft pushing a bit higher. Microsoft. For those of you long Microsoft, looking good. Nice little pop there.
One thing that we want to circle if you end up seeing the selling off, it's almost as though markets are. I think that I differ from two. It seems as though the real economy has been basically insensitive to both policy rates and even to longer term rates. I think that where maybe this is slicing everything, that the thing that we're worried about is those that deteriorating wealth effect actually start weighing on consumer stuff. Really favorable wealth effect. I think that likely will matter more
Interesting. Okay, guys, what I want to do, I'm gonna come on back in here. President Trump, shortly after the decision, made some comments about his ability in God, meaning having wars. He was in the Oval Office. He goes, I know you'd love to actually do a retreat, stop wars, but we fight for the rights. Is this, in your view, do markets think this is an independent Fed chair?
Netflix trying to push a bit higher, Microsoft, Apple pushing higher, S&P trying to hold on to this level. Strategic we can read a lot of the questions and given the press conference and decision. Might be able to see more of the new Fed chair. All right, guys, thank you so much. Really appreciate it. As always, Stuart Paul, Bloomberg Economics, US and Canada economist, Aaron Jersey, Bloomberg Intelligence, Chief US Interest Rates Strategist. We got the same part coming up.
We do. We've got the CFO of Aon joining us just talking all things after public earnings, including its insurance. Apple. Apple, Microsoft. It's 2:21 on Wall Street. We do check markets on Brent decliners, moving up semiconductor shares with the SOX, the Philadelphia Semiconductor.
Microsoft still hanging out at the highs. That's a new high a day. Okay.
Bloomberg Mag 7 Index higher by 2%. We've got two of the A names on about half of those trading. Mag 7 Index. Apple went below 0.5%. The SOX both being up 7.7%. The VIX back below 15. 2-year day after Fed and news conference. The 2-year yield 4.22%. The 10-year 4.66%. The 30-year.
Okay, hedge flows trying to push higher. 74.25 is still a problem.
While we're talking restaurants, Jersey Mike's Secret, Charlie Ross coming up at 2:40 on Thursday, trading shares up 1%. Starbucks higher after earnings up 3%. I'm Charlie Carol Tim, magazine Bloomberg Business.
All right, Charlie, thank you so much. So shares today on again for second day. The company did report adjusted earnings per share for the second quarter weekend against estimates. That data came out early Wednesday. We did see this raising price earnings for the company since reporting those results yesterday. 42%. 2-minute 4 analysts raising price earnings.
It's good to have that with slight increase, Executive Vice President, CFO, nearly $70 billion professional services advisory. So, a little over 2.5%. Hey, good to have you back on the program. The company and the team always agree on how the business world is feeling. When it comes to things like risk, climate, government issues, M&A, and more, where do you think the biggest opportunity?
Yeah, Serini, I would do at least 10 to 15 deltas. I'd go out. The soonest would be next Friday, depending on how much income you give up. I might go out 2 weeks. I sold some Microsoft today, call credits, and some put credits on Meta on the turn. Talked about that early this morning.
We are providing solutions to help them with that as we give them access to data, and understanding this, and match it with calculations.
You got the 200-day overhead for Amazon, right? Or is it the 50-day? I forget which. Amazon.
I don't want to be faster, but in other words, it's geopolitical uncertainty.
50-day. 50-day, I would go at least 260.
It creates complexity for us. And that is good for our products and good for our shareholders as well. If you think about that geopolitical problems, you have not just the assets themselves, the ships, the problems, you also have supply chain risk, you have violence and terrorism. Those things create demand. Companies want to protect their assets, and they still want to be able to invest in grow and do that. We give insight, and of course that drives
All right. I want to cut to the chase with you. How freaked out is the corporate community? Because there's a lot at them. This war that just, peace talks, not peace talks, more tax. There's that. There's the higher costs of maybe doing things in your backyard in terms of production, energy costs. It's just a lot. So how freaked out is
risk has been rising. Risk has been rising, and the intermingledness of that risk, all of them connected, is creating more angst, more volatility in the P&Ls and on balance sheets of our clients. And when these things come together, there is angst, but they still want to invest. They still.
Yeah, I'd do 5 wide at least, or whatever you're comfortable with. You know, if you want to do 2 or 3 wide, that's fine too. If they have half strikes, 2.5.
And then, of course, bringing in not just the industry from insurance.
Just check your 20 deltas. I would go at least, at the highest, I'd go 20 deltas. Maybe 15 deltas makes more sense, because these stocks, like Microsoft, jumped a lot more than anticipated. S&P is still pushing up.
Tim, if you think about it, these data center sites, some of the clients that we'll be talking to later today, talking about at the beginning of the program. I mean, on that.
S&P trying to push a bit higher. S&P.
The insurance industry traditionally is up $5 trillion across property, across casualty, across health, and wealth as well. So when you bring on data centers that are of this size, it's not sufficient capital for traditional insurance. So we've been talking for quite some time for the industry to stay relevant. We are going to need to have access to the new size. There's a $250 trillion opportunity. We just need a small slice of that.
S&P.
So institutional investors, that's what equity, sovereign funds. And the only way we're able to get to it is if we can provide the data. Just like we began this certain bond market, which is growing at its human rate. Same thing here. We think we're certainly having this asset managers want assets that come to a rate of return. We are giving them a data to help them see that they can get attractive yields off of that. And we do think that we can develop a business.
All right, S&P is breaking higher. S&P trying to go.
So as you guys know, you have all described in the past the data centers as a $10 billion opportunity. Is this still a reasonable amount? Has you changed on it? Is it less?
When we gave that estimate, the spin in 2026 was less than the estimated today. The infrastructure.
That'd be negative.
Be at least $2 trillion. Some estimates have as high as $5 to $7 trillion. So it's only increased since then. The question is, are we going to be able to question of getting the sufficient capital to be able to ensure and manage the risk associated with it? So we're very bullish that that's going to be an opportunity, a tailwind for our moving forward. And we investments on capabilities using our data, because we are, the insights and asset.
All right, maybe a silly question, but I'm thinking somebody I know might be listening or watching and wondering, when we talk about enough insurance capacity for AI data center demand, what exactly are we talking about? What is that insurance capacity?
Well, if you have think about your phone,
It's just protecting the data center, is that what it is?
It's protecting the data center. We'll look at this, protecting the operations of it. If weather comes in, cyber has an impact on it, the general liability. So we actually have something that we call the data center lifecycle program, not just the physical facilities itself. We measure risk here with data centers. Our CEO likes to say, we measure it in terms of operations. So and you can ensure that we'll all match that with the right capital.
And we're actually seeing DeepSeek is developing a massive artificial intelligence data center in Inner Mongolia
That would 1 gigawatt worth of compute companies to build its own facility, while leasing additional capacity to other companies. It's pushing to bring up this part of its data centers capacity by the end of next year, early 2028. And then we're speaking with that new CFO and talking data centers, the insurance market for data centers. What do you think when you see DeepSeek developing this massive AI data center?
As you were reading it, there were three things that were going on. One is the construction, two is the energy associated with it, and that you'll need to support this data center. And the third thing is the engineering expertise that we have in understanding, not looking at the concentrated location of dispersing the risk and giving insight on that. So that is something that can let one benefit from the insights they pursue. Sure they get the returns.
Well, let me just go there then. Are you working with DeepSeek? Are you working with Amazon, Meta, Microsoft? You smile for those who are listening.
You smile and say, we are, given what we have strong relationships across the hyperscalers. Of course, we talk about any specific company here, but increasingly, the expertise in the engineering advice. I think I mentioned on this program that even before the large data center boom here, we had advised on over 30% of the data center builds in the US, which is more so than in any other country. You have to go to China and Germany before you start to see the nice amount of that as well. So imagine all the engineering expertise that we have, understanding where to put the sites, how to build them, how to ensure them themselves. And so with that expertise, I think it drives more demand. So we're the understanding that we talk about on the show.
Just real quickly, any signs that this stuff is slowing down? Because this is the big question, or one of the big questions. Any signs that you're like, oh, this, insurance capacity for AI data center demand, it's going to slow down? Any signs of that?
The last 5 quarters, within the construction, which is where it shows up, including this quarter. That is, so we drive the broad based and the product line. So we're not related to this, but it has been a strong contributor for us. And we see it to be a tailwind.
Come back soon. Thank you so much. Always appreciate it. Yeah, me well, Edmund Reese, Executive Vice President, CFO of AI.
Just repeat that, right? DeepSeek. What would you
It's a lot. Makes sense. And what sense? Do that shares of companies that make sense?
sale market cap?
Yeah.
I'm just watching the S&P. Microsoft diddling at the highs. Netflix, ditto. Apple trying to push higher. Number of stocks advancing today. $170 stocks advancing. So fewer stocks advancing compared to even yesterday. It was like 360 stocks at the open.
begin the developing story as we have been reporting DeepSeek planning a massive AI data center in Inner Mongolia. That's according to people familiar with matter. It'll add 1 gigawatt worth of compute. We're seeing dip buyers coming to the market specifically for semiconductor names. The SOX, the Philadelphia Stock Exchange's semiconductor index, surging now by 7.5%. Tech's getting a big lift. The NASDAQ 100 index up 3.1%. NASDAQ Composite up 2.6%. S&P keeping it all in context up 1.5%. The Dow meanwhile up 5.72, up 9.1%. A day after the Fed decision and Kevin Warsh's news conference, the 10-year 4.66%, the 2-year 4.22%, the 30-year 5.21%. Gold up almost 1%, 41.05 the ounce, 3 for crude. West Texas Intermediate down 1%, 83.64. Brent 89.28, 1.6%. Recapping stocks higher, semiconductor surge, the stocks up 7.5%, S&P up 1.5%. Tim, that is a Bloomberg business.
All right, it is indeed. All right, Charlie, thank you so much. Charlie's been all over this. We all know. Here at Bloomberg, another day, another RPO, Jersey Mike's. Subs making its public debut, company pricing 43.5 million, share IPO $23 a share, middle of the range. The offering attracting institutional investor demand more than 10 times the available shares. That's cool. So people are interested.
People were interested and they are interested. Let's head downtown to the New York Stock Exchange to Jersey Mike's CEO, Charlie Morrison, right now with the Bloomberg co-host.
Thank you.
I think it's
S&P. S&P. Okay. Continues. Looking good. Microsoft. Okay, fading from the high of the day. Okay, Meta. I did sell those put credits that I mentioned earlier. Over here when we turn back up. Right here, over here this morning. So that's higher. I posted those in the spreads channel when IV was pretty high. I sold the Octobers. Just a little over $125 per contract.
About the outbreak.
Okay, futures. All right, Apple looking good going into earnings. Google turning back up. Shit, I wanted to sell some Google put credits. I did want to sell some put credits. I already had some. I took some off yesterday. Do I want to do this? Yeah, I'll wait until next week. Credits sold today are doing fine on Meta. Put credits on Meta and call credits on Microsoft. Microsoft, just crazy move on Microsoft today. ATR is up to 16. Currently, it's up $66. So what's that? 4 times, almost 4 times its ATR. Even at 3 times its ATR, that's crazy. Way overbought. That should pull back in. Apple looks pretty good for earnings for those of you trading. I know DeChuster wanted to sell call credits or put credits because I've been seeing a lot of volume coming in this one. Almost want to take a call spread, but cheap call spread for tomorrow. I'm going to pass. That's a bet. I'd rather sell premium than buy premium with the volatility where it is. Speaking of volatility, where is VIX? VIX. VIX dropping off pretty nice today. So maybe we'll get a follow through tomorrow. I'll reassess over the weekend in a weekend video. There goes Apple. Apple going some more. Apple going more. Okay, trying to take out this high, Apple. Apple. S&P is gearing up. Watch, S&P is starting to move here. S&P. Do I have anything on S&P? I had some puts.
Good stuff, Danny. Thank you so much. That, of course, is Danny Berger. She is the opening discuss with the CEO of Jersey Mike, Charlie Morrison. By the way, that's taking a bite on the shares of Jersey Mike. Good price. Down below it. IPO price $23 a share right now, trading at $21.85 a share. So it's down.
Starbucks, SBUX. Starbucks gapping up today. Starbucks. I sold my Starbucks, right? Pretty sure I did. Yeah, I sold Starbucks. Okay. SK Hynix stuck at the high of the day. Looking for that to be higher tomorrow. Looking for a follow through in chips tomorrow. Tesla trying to take out the high. Tesla trying to take the high road. Okay, looks pretty good. Tesla, it's above the opening range high now. Tesla, still basing, but turning right here. Let's see what the S&P looks like. Hedge flows look like they're flattening out there, Frano. Hedge flows. Now let me tone this down a little bit. Okay. Zero day 74.25 is get above 74.25. Okay, so above 74.25. Yeah, exactly. Let me reword. Now that it's above that, 74.25 could run here. S&P. There's nothing above that.
This is Bloomberg Business Week Daily with Carol Nasser and Tim Senevet on Bloomberg Radio and Television. Indeed, getting close to the last hour trade on this Thursday. We've also got Amazon and Apple earnings out after the closing.
Google going here. Google running.
But shares at Starbucks, they have been
Oh,
shit.
shit.
In today's session.
Oh, shit.
Jermaine Bostic, co-host of the
Really smart about what we spend on these uplifts and the implications on the store. So we can do these things for roughly $150,000. The store continue to perform. The experience that partners have is they've got a new, really great looking coffee house, and that the customers have results in new transactions. So it's been a great program. We'll continue to push the program forward. Celebrate. Create a great coffee house. And we have that great partner, like for resale and customer experience. More business. And it's not a big investment, but it's a meaningful investment. And that gets us great.
Is there any way you can share with me what the difference in comp sales is for retail store relative to the stores?
We haven't shared that publicly, but what I can tell you is we see a move in positive direction for this transaction. And because of what we're seeing, we are accelerating.
I think the last time we talked with the transaction, we were talking about improving the in-store experience, but also improving the speed at which they were able to pay working with the doctor. I know there was some kind of some of the time that you shaved off, and we're talking seconds here. But it seems like those seconds now much better.
Yeah, look, this is one where I'm really excited because
He set out right from the bill that we wanted to improve the speed, the customer's experience, and do it consistently. And kind of behind that is really the strive towards more throughput. And we've seen just that. So we've got better throughput in the mornings. We also have better throughput in the afternoons. And frankly, customers all day long, their transactions are up today. When you kind of pull that back, yes, customers are loving the experience, but the partners are doing a great job of being staffed as a team, deployed correctly, and consistently executing the service model. And results in better speed of the drive-through, better speed in the cafe, more on time in the pickup, and frankly, pretty good speed in the delivery channel as well. So it is having the effect of what, in totality, Starbucks business now, I think, is providing the experience that they want at the speed that people need based on the occasion.
Starbucks CEO Brian Nicola today.
Yeah, we've got some big earnings, by the way, also coming up after the closing. We'll be breaking those results. Also, a great panel of experts to break through the numbers and people reaction.
I think Amazon and Pat.
Did I see it?
Yeah.
We got many this.
It's
Amazon. It's amazing.
Yeah, that's a good. We are a little bit, but we're talking about it.
Mistake. Amazon. For those who are subscribers and share book play, we would love for you to exercise some questions. Easy to do so, just submit them to our team to enter live on air, just radio, and then we'll sit in. And listen to the questions to the sit in. Again, just have to move back to the sessions. Look at these earnings, look at these results.
And we don't want German for anyone. On this, we like question ready for them. Submit them to us. Subscribers.
Super interesting. And Apple was kind of keen for not being in on the CapEx spend, right? There was a lot of, and their strategy being behind and so on and so forth.
Share price this year.
I know. What is it?
It's up.
Exactly.
$520.
And so now it's kind of like, all right, all of you out spend as much money, do your thing. But we know that the analysis and the trades that are much thicker in terms of return on investment and those money, the money spent on AI, the CapEx spend versus what is that? For Microsoft, turned out to be pretty good. That's what I said.
Watch the S&P 500. We're starting to pop here.
Yeah, that company reporting earnings. Yeah, shares up more than 22% still. Market cap of $4 trillion. Yeah, that wasn't a money that anyway.
All right, selling 741s. Okay, there goes the S&P.
0 DTE puts. Size.
20,000 puts.
NVIDIA post.
681.
Long dated.
NVIDIA puts leading. Tesla pop in here, Tesla. All right, looking really good. Okay, SOXL. Okay, S&P looking really good here. S&P.
Zero DTE. Size. Zero DTE. Call sign. Size. Micron pulse. Long dated. Micron pulse. Long dated. Zero DTE. Call strip. Micron pulse. Long dated. Micron pulse. Long dated. Shenanigans. Zero DTE. Call sign. Size. AMD pulse. Long dated. Shenanigans. SPX pulse. AMD pulse. Long dated. Shenanigans. AMD pulse. Long dated.
All right, looking good here. S&P.
Zero DTE.
Meta moving
call
higher.
sign. Size. Zero DTE. Call strip. AMD. Long dated. Shenanigans. AMD. Long dated. Shenanigans. SPX pulse. SPX pulse. SPX pulse. Spider pulse. Long dated. Q's pulse. Triple semi pulse. Long dated. Triple semi pulse. Long dated. Zero DTE. Holster. They struggle with the unpredictability of the putting in the environment. It's really strong. So we're careful is bringing the intelligence into the minds, giving them space to reason about their environment, to understand what it means to complete a task, and then take action and learn from it. This is really at the core of what we enable general purpose robots, which would enable a lot more applications. Yeah, so we're bringing general robotics to zero DTE pulse electronic and with agile robots. And then we also have a program that enables you to sign up and be an early tester of this model. And the goal is to be able to bring intelligence that can enable them to do a broad range of different tasks, to operate in a broad range of environments. And you asked me earlier about what is new with Gemini Robotics 2. And really what's new here is that we're bringing full body intelligence to robots that are all the way from tabletop robots to humanoid robots. We're also advancing dexterity so they can use their hands in addition to robot grippers. And we're enabling even multi-robot collaboration that allows them to do more complex tasks.
Dr. Brana, it's great to have you here with us on the show. The challenge for robotics across the field has been to ground them and have abilities in the physics of the real world. I wondered if you talk a little bit about the training and the data here. How much
Zero DTE
real world data versus simulated or synthetic data? as one avenue to overcome the physics challenge?
Yeah, that's a great question. Maybe one thing that is important to understand here is we're building an intelligence layer that actually has multiple models. So we have a high-level reasoning model, which is Gemini Robotics ER2. This is the high-level brain of the robot. It understands the environment.
Zero DTE qualified.
Then it can translate that into a sequence of steps in order to do a new task. And these models are essentially
Long data.
so they're trained on
SPX.
large scale
Long data.
web data.
SPX.
Yes, very
Zero
similar to
DTE.
Gemini. Then we also
NVIDIA.
have action.
Long data.
If you're trying to do a complex task like organize my garage,
S&P gone.
the reasoning model is thinking through all the steps that you need to do. And then the action model takes on when you have to put away the watering can in the top right shelf, for example. This action model is trained with a mix of regular data
Zero
from
DTE.
VLM,
Constraint.
basically it inherits from Gemini, as well as data from simulation and real robot data and even human data. So it has a combination of multiple sources so that it can start understanding motion. Essentially, we're teaching Gemini about motion and actions in the physical world.
Dr. Parado, go ahead. No, come on, Ed. Yep.
No, sorry, I'm
Yeah.
so in this field, Karina, I just like so many questions.
That's the oh,
Like
shenanigans.
complaints in your industry, Dr. Brown.
Zero DTE qualified.
They span reasoning, dexterity, speed, safety. What is the Google DeepMind house position?
Use
What the biggest bottleneck is for this industry right now?
Yeah, you're right. There's actually robotics is hard.
Zero
There's multiple
DTE
bottlenecks in
qualified.
general purpose
Soft
code.
pulse.
Certainly,
long data.
one
Zero
of the things
DTE
we unlock
constraint.
we see
Use
that
pulse.
going to really dramatically explode the opportunity for robotics is dexterity. And this is one of the areas that we focus on in this.
Micron pulse.
Because these hands that we have are incredibly powerful, right? Like we have lots of muscles and tendons and skin, and our hands are pretty easy to adapt to any object that they grab, and they have sensing. So dexterity is incredibly hard, and what we mean here is pretty much what you do every day when you're preparing your coffee or your breakfast. You are
Zero
exercising
DTE
extra
constraint.
tasks,
Long
right?
dated. Soft pulse.
And this is hard for
Long
robots.
dated.
And what we're
Shenanigans.
doing is that we're showing
Zero
DTE
DTE qualified.
degrees of freedom hands in a humanoid in order to do a task like tying a trash bag or removing a light bulb, things that are traditionally
NVIDIA.
really
S&P still going here.
even though we do them every day.
SPX.
Long
dated.
Wow, S&P.
Constraint.
I think it's fair to say a lot of folks in the audience, but it's going to be applications.
Spider pulse.
But do you
Long
also
dated.
see it? Where do you see all of this going? You guys are kind of front row seat to the technological expertise essentially, right? To run these.
Q's pulse. Long dated.
Okay, everything's catching a bid. Everything catching a bid.
Definitely, we are working towards building an intelligence that would enable robots.
Zero DTE. Constraint.
So certainly.
Wow, the S&P has gone ballistic here.
Q's pulse.
There's less humans around them. But the technology that we're building really is agnostic to where this is being deployed.
Q's pulse.
We just want to be able to evaluate it and continuously improve it.
Wow, look at the S&P. That's crazy. Got to be news. Let's see what's going on here.
Phrase a really good point in the industry talks about a lot, which is how do we get to a place where the system can be in close proximity to humans, including human-centered environments? How much is that kind of the North Star?
Okay, what the hell is going on here?
We certainly care about robotics being useful to humans in every environment. So human-centered robotics certainly a part of the research that we do. And so
Wow, biggest leap since 2008.
And we think of safety as a pretty deep subject with multiple layers. So we think about safety
Wow.
in the sense of
Nice, nice, nice.
Zero DTE.
We also
Call
talk about semantic physical safety, which is essentially common sense for robots. We have robots today.
Zero DTE. Call
Starting with common sense, and do things safely. And then you also have, of course, the traditional control safety of distance from humans, understanding of those from humans, so you can change your behavior.
Spider
Be careful with
Long
objects
data.
around you.
Zero DTE.
So we
Call
are very excited about bringing this technology across
All right, this is a gift.
and we're really
Short-term
working towards
options. Trade.
We are grateful you joined us.
Zero DTE. Pulse.
Vice President, Head of Google also, of course, had Bob on San Francisco, and it's going to be back with us a little later. Amazon.
Big move here. Jeez.
Zero DTE.
Back to the 50-day.
Not so much. Each of them definitely does turn towards to mix it up, which along with the other next. This is market.
Zero DTE. Call.
Stop.
I know. Zero DTE. Call.
Anyways, speaking of IT outages, yeah, let's not, it's the best performing. Are they missing out when it comes to everything? They're missing it. Do I need to bring this closer? Okay.
Zero DTE. Call.
Well, they fell bleep backwards into success, right? This is,
Marker, maybe.
well, it's a classic example of family, right?
74.25, 74.25, 74.25. Now that it's above 74.25, looks good.
Unless you install the public beta, you don't have it. If you install it, I know you're into this stuff. Now, I would encourage you.
To a working series.
Okay, fine. So Carol and everyone listening to this, you can get the public beta. You go to your settings, you can go to software update, and the public beta should appear there. You gotta sign up and believe on this website ahead of time. It's pretty good. We did a test last week, yesterday at the Fed meeting. Yeah, when you did it, it looks so much better. When I did it, it looks a lot.
Long date.
Yeah, to get the Fed
Deep
meeting, right? And so, I know, brilliant. So it works well. But their AI strategy has basically been integrating models from Google Gemini.
Zero
Technology
DTE.
from ChatGPT to some of its applications. They don't have a really solid in-house underlying infrastructure for artificial intelligence. The other guys do have a lot of spending, right? Tens and hundreds of billions of dollars, trillions of them spent on this. Apple has really stayed away and has gone very slow, very calculated, and they're very happy to use everyone else's positives and everyone else's mistakes. What that has done is that has put them years behind the competition. Siri is only good now, at the tail end of 2026, when this is going to come out. And they have a lot of risk of losing customers. But they get, right? Everything seems to be timing out perfectly for them. Now, what we need to focus on is the CEO transition. We need to focus on if they're going to be able to roll out their new product pipeline. And the fact of the matter is, they have got a lot of good stuff otherwise, but it's been gated by
Zero DTE. Pulse.
Siri is at the core of these new products, AirPods with cameras, new home devices,
Spider Pop.
camera
Spider Pop.
security.
Zero
sensors.
DTE.
And
Call.
so they need to get Siri into top shape and that's release new stuff that actually makes them money. We talked about Mark before. about
S&P looking good. Very nice.
Does it not? Is it different?
It's different, but I would say Apple's AI, I mean, even though it's in good shape, it is nowhere near as capable and as good as what you're seeing from Google, what you're seeing from OpenAI, even what you're seeing from Meta. It's essentially two different universes. I mean, Siri AI works, but it's child's play compared to what you can do. I mean, if you use the new ChatGPT voice mode, this is the new one they rolled out a few weeks ago.
it's day and night. It's like talking to a human versus talking to a
Zero
computer.
DT.
And you can really tell the difference. And this technology is going to enable OpenAI to release hardware
Zero
devices
DT.
that are like
Culture.
nothing you've ever seen.
Stop.
So, Apple's in good shape. They're at a good place, but it is really
Tesla
there's
long dated.
at least they're in the
Deep
game now.
cold.
Is this
TSM Pulse. Tesla Pulse. Long dated. Deep
if it's not Timothy Donald Cook's last earnings call, that means something horribly wrong because that is the plan. Q3 is Tim Cook's last full quarter in charge of Apple. CEO John Turnus, the longtime hardware chief, takes over 2/3 of the way into the fourth quarter, or he's taking the fourth quarter right now. So if this is not Cook's last call, something was really wrong. So I think.
All right, looking really good. We got above that level.
Should be praying this is Cook's last
Zero
call.
DT. Pulse.
Well, that means something happened to Turnus. Oh, Turnus on call. Would bet heavily they were going to bring Turnus.
Zero
The
DT.
message they're
Pulse.
going to strike right now is continuity.
Soft pulse.
Turnus is going to
Long
continue to
dated.
be
Deep
like,
cold.
my tweet.
Soft pulse.
Okay, so
Long
Turnus
dated.
has had the last
Deep
little,
cold. Soft
year and
pulse.
a few days ago,
Long dated.
and
Deep
it works
cold.
identical.
Soft pulse.
And so
Long
Turnus
dated.
and Tim, they basically
Deep
look like
cold.
the same dude, one with gray hair, one with gray hair. This is what they did with Yes, it was exactly the same. It's literally they're wearing an identical suit. It's crazy.
Zero DT. Cold.
No. It's messaging to Wall Street that Turnus is going to be more the same. More the same, but it's a big September.
Triple
It's a
semi
big
pulse.
September.
Long dated.
Wall Street likes Tim Cook, likes what's happening with the storm, and like how they created, yeah. And so,
But he still sticks around in terms of dealing with perhaps the.
Zero DT. Cold.
sticks around for those types of things.
Yeah.
I'm curious to see what kind of
Soft
executive chairman
pulse.
he's going to be.
Long dated.
Is he going to be like Jeff
Deep
Bezos, where everyone knows he's around if needed, but Andy Jassy runs the show? Or is he going to be like
Zero
I'd be
DT.
very shocked
Cold.
if it's like Bob Iger. But we'll see. It's hard to let go of power, especially when you've been there
Zero
for 20
DT.
years, you've been
Cold.
CEO for 15 years. And if there's any bumps in the road, it's going to be tough for Thomas, but I think they'll be all right, especially with that fine thing valuation. Yeah. Don't worry, Mark Gurman's going to come back with us.
All right, coming up, CEOs dish it all out to Kate Crater. They talk about their biggest regrets. That's next.
Zero DT. Cold. Sandisk Pulse. Shenanigans.
All right, nice move on Amazon there, going into earnings. Amazon, Apple trying to chase it, but looks good.
Zero DT. Cold. Size. Meta Pulse. Long dated. Meta Pulse. Long dated. Shenanigans.
SPX calls, long dated. Q's puts.
Okay, S&P at the highs. Nice, 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 nice. All right, we got 40 minutes to go. A little more than 40 to go. Thirty-seven minutes to go. 37. My clock isn't up to date. All right, cool. All right, I hope you guys had a great time on that one. That was nice. Nice little pop there.
Spider puts, long dated. Q's puts, long dated.
It's all day long. We're at best level of the day. Grid index right now. This Bloomberg business function is brought to you by Golden Bricks. Inflation, tariffs, and volatility have some investors turning to gold for stability. They got a free gold and silver info guide for 401k tax penalty free. Go to goldenpressmetals.com/buy. Stocks are higher, at least Microsoft soars after reporting of the fastest cloud growth, cloud unit growth in 4 years. Microsoft shares, well, they're surging now. We've got Microsoft up by 16.7%. That's giving a lift of the Nasdaq 100 index up 3.5%. Semis are rallying with the stocks. The Philadelphia semiconductor index up by 8.3%. Keep it calling context. S&P up 1.7%. Dow Industrial is up 645, up 1.2%. Nasdaq up almost 700 points now, just about 2%. 10-year, the day after the Fed decision, 10-year.
0 DTE, calls.
5.66. The 2-year, 4.23%. The 30-year, 2%. Gold, 41.11 yen, up 1.1%. West Texas Intermediate crude down 1%, 83.62 a barrel. Brent crude.
Battery died on my mic.
Long dated.
It's the only thing about the lapel mics, they're battery operated. Okay, Tesla turning the corner here looks pretty good. Can I get back up there?
Micron pulse, long dated. Deep calls.
Okay, pushing a bit higher, Tesla.
Micron pulse, long dated. Deep calls.
Meta turning up, looks good. Nvidia. Got September 205, 210s left for NVIDIA, so I'm looking for more upside. Tomorrow and next week, NVIDIA.
NVIDIA Pulse.
Amazon and Apple earnings
NVIDIA
tonight.
Pulse.
Amazon
NVIDIA
and
Pulse.
Apple earnings tonight.
Meta Pulse. Long dated. Meta Pulse. Long dated. Good Pulse. Meta Pulse. Long dated.
Steadier.
Zero DT.
SoFi at the high of the day. SoFi having a pretty good day. SoFi. I have 2028, June 2028 calls. Got plenty of time on SoFi. SoFi up almost 8% on the day. Still got work to do. SoFi on the weekly time frame showing you a range. Okay. This is the daily. Weekly. You can see these lows right here.
Long dated.
So 382 Fibonacci would be 22-ish. 2383, 50%. 618. 25, 26 bucks basically. So by June of 2028, we're 26. So that's a year, more than a year, 2 years from now, right? Less than 2 years, but you know what I mean. So we should be able to get back up there. Definitely looks good on the daily.
Zero DTE. Call side.
Stochastics oversold, MACD turning. My only wish is that I had bought it down here. I could add to it actually. Still got time. RSI rising.
DTE. Size.
RSI starting to rise. MACD stochastics turning. Okay, that'll look good.
SanDisk Pulse. Long dated.
Okay, S&P continues to fade. Okay, the pop is giving you an opportunity to exit. The pop that we're seeing giving you an opportunity to exit at the highs of the day. If you got short-term options, we got Apple and Amazon earnings tonight. Amazon, big pop above the 200 a day. If you're going to sell premium, I would sell north of 260, maybe even 265 or 270. Previous levels over here, like maybe 270, 275. I don't know what the 20 deltas are, but those have got to be about probably 260 is a 20 delta. I would even flirt with 10 deltas. 5 wide.
SPX Pulse. Long dated. SPX Pulse. Long dated. SPX Pulse. Long dated.
You don't have the same switching costs because your whole life is in gaps. But here in the US, it's a different story.
That's a really important distinction. Going back to Tim Cook, who oversaw all of kind of the supply chain, the operations, if you will, but I also think about Steve Nance. What made China so sticky for them was their expertise ultimately and their capability to manufacture and produce And I always think about what Steve said about factories and same thing for the auto industry. I mean, this is just a reminder, I'm just going to go a bigger, broader story about bringing things back domestically to produce here. There is an expertise that China has, whether it's doing it for the iPhone or doing it for cars, and that is something many would say the United States or other nations, right, or other regions.
0 DTE puts. Size.
But Apple, yeah. Well, it's a different beast from, you know, you think about the Mac 7 and we lump them all together because of the valuations, right? There are the hyperscalers, whether it's Alphabet, whether it's Microsoft. I really think about those two, certainly increasingly Meta, but Meta is still a social media company, right? Where advertising is so important to what they do.
It is the company. That is the company. I don't, you know, say what you will about the
Amazon Pulse. Long dated. SMH Pulse. SMH Pulse. SMH Pulse.
Ooh, a lot of SMH pulse alerts. Probably people selling calls overhead. I wouldn't assume that that is bullish. I would assume that people are selling premium overhead. Assume people are selling premium overhead. We've had a huge move today.
Long dated. Amazon Pulse. Long dated.
better served, because that is what Meta is. It's the best way for, you know, small businesses, many large businesses to advertise.
Spider Pulse. Long dated.
Yeah, exactly. What I will say about Meta platforms, formerly Facebook, I even think going back to the IPO, you and I have talked about this, when they IPO'd and it didn't go so well, and because they were
Amazon Pulse. Long dated. Apple Pulse. Long dated.
That's the big thing. And to do so, exclusive to
Tesla moving. Let's go Tesla. Let's go Tesla. SoFi looking good. S&P 500 fading. Apple with earnings fading. Amazon giving you the opportunity to sell into strength. That's what I would be doing, or selling premium. Selling
Nvidia
premium.
Pulse. Long dated. Deep put. Nvidia Pulse. Long dated. Deep put.
Personally, I have to sell some. I have to take some risk off because I have too many. I have too many positions in semiconductors, Nvidia, AMD, SK Hynix, SOXL. I sold Micron a couple of weeks ago because it didn't follow through. It cost me a couple of bucks, but I got out of that one. So I'm just reducing risk. I sold some Nvidia this morning, the 200s, 205s I had. Sold those. I still have the 205, 210, so I'm looking for Nvidia to continue.
SPX.
Tesla, I have a position. Looking for Tesla to push a bit higher, maybe. SOXL. Okay, I got a pretty big
Micron Pulse.
I got a pretty
Long
big
dated.
load of SOXL 150s. I
Size.
should have sold some just now. I should have sold some here. That's okay. I'll probably sell some tomorrow. I'll be in the trading room tomorrow. I just won't be broadcasting live.
Oracle Pulse.
I haven't had a vacation in ages, and I hardly ever take a Friday off, even though it's the slowest day of the week. Usually it's even slower than Mondays, and that's pretty slow.
Q's Pulse. Long dated.
Fridays are generally days to reassess your positions, adjust, etc. But we got Apple earnings and Amazon earnings tonight, so we'll have to check that out. I'm going to be leaving right after the close, so I'll have to check in the trading room. You guys have to post in the trading room what Apple and Amazon do, because I'll be driving. Anyway, I hope everyone's having a good day. We've got about 22 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Thursday, July 30th, day after the Fed
SPX Pulse. Long dated.
did their thing.
SPX.
Markets didn't like the Fed
Long
comments yesterday. We pulled back, and then we bounced furiously today. So you should expect that. If you're like, what the hell happened between yesterday and today? It's all that negative gamma.
Tesla Pulse. Long dated. Amazon Pulse. Long dated. Zero DTE. Call side. Size. Zero DTE. Put strip. Micron Pulse. Long dated. Shenanigans. Zero DTE. Put strip.
Reporting on Wall Street, we do check markets all day long. Stocks continue to rip.
Zero DTE puts. Size.
With Microsoft setting for its best tool since 2008, rapid cloud computer, with my shares are down today's debut, and oil futures have dipped as flows and short foods have delivered as the pension. Rapid things have golden wheat better. Sarah?
All right, NVIDIA looking for another bounce. We got 17 minutes to go. I'm going to take a 2-minute break, go say something to my wife, and I'll be right back.
This Apple Public Roads. Bloomberg Radio. For TikTok, everybody, we've got just about 18 minutes to go until we wrap up the trade on this Thursday, July 30th. Laura Martin's with us. She has seen she joins us from Los Angeles. Similar to talk about hope you are well. Good to see you. Always on ways. Let's take a break. Go into Meta. Let's talk about investors with some of the aspects of this report. Worried about their strategy. Come out and he's not in a competition with somebody new. So he's now designing chips for different video. You know, his glasses have been trying to take Apple's hegemony away from devices. And he's doing search and he's doing e-commerce and it's Amazon stuff. And now he says he's going to compete with Microsoft because he's going to be enterprise agents. You know, so he just keeps doing
What do you think? Stick to his knitting and stick to advertising? Where should he do that?
To 3 billion people a day for his family apps. And go and do something consumer facing that basically Microsoft can't do. Managing Google, I mean, Amazon's completely enterprising.
Huge pump, long days.
Get that. I just don't get that. You got media, you know about jumping the shark.
Zero DTE.
You know, for the past 20 years, Microsoft has done a really good job of positioning itself as a company that is going after productivity. I think of that as like the anti-productivity. Like you don't go on Instagram to get work done. You go on Instagram to get away from work.
This is why I take it so deep.
It is
Zero DTE. Cold.
There are pieces of hardware you can buy to lock yourself out of Instagram because it is so
AMD.
How does it get
Long dated. AMD. Long dated.
When he's going to introduce his productivity tools, I think he's thinking WhatsApp and having small and medium businesses do more communications. He's got a subscription. Businesses. I think that's not so much
AMD.
leisure
Long
time.
dated.
What you're talking about is consumer leisure time, which as AI does more and more functions faster, we don't even have leisure time. We have more windows of time to spend money against
Spider pump.
All right, should we move on?
Zero DTE. Colton.
Let's talk a bit about what's going on with Warner Brothers Discovery. I mean,
SPX.
on this screen.
Long dated.
It's gonna get done. It's a while. It's been like, it feels like a year. I think it's less. You know, I think two things. One,
Spider
it's
pump.
definitely comes to mind. I think Allison's not since the. It's not. Yeah, essentially this is politically motivated because there's almost no oversight. And these are important issues to consider. The unions in Hollywood really are nervous because there's going to be $6 billion of layoffs. Redress that enough is to do 12 states get together. It's sort of off the field. So, how much this is really
Is there any chance Netflix comes in?
Micro lost deep cold.
Nice day. Nice day today. Tesla. Okay, Meta's trying to push a bit more. Meta.
Better pulse. Long dated. Deep cold. Better pulse. Long dated. Deep cold.
in every line item in genre that not only YouTube does, but Disney does, and Warner Brothers does. There's just so much money in films, especially these world-building films like Odyssey or Oppenheimer.
Better pulse. Long dated. Zero DTE. Cold.
Are now finished.
SOXL looking for higher prices. I got the 150s. Also have some one.
Video.
I think I got 160, 170 call spreads. Nvidia looking good here. Nvidia pushing higher. Back up to the highs. Okay, Nvidia is starting to push. I'm going to take some Nvidia off here into strength. Let's see if we can pop here. Got 10 minutes to go. I got 25 of these. I'm going to sell another 5 or 10 of these 205 210s September. Rocket Labs, done with that. Meta looks okay. SK Hynix, great day on SK Hynix. SK Hynix, I have March 2027, March 2027 called on. Okay, there goes Nvidia. Okay, Nvidia, let's do it. Let's do it. NVIDIA trying to push higher.
Q's Pulse, long dated,
End of day run on NVIDIA.
long dated,
Meta turning back up. Come in, NVIDIA, let's do it. Let's stay above the 200 day. Oh boy. 8 minutes to go.
SPX Pulse, long dated, Q's Pulse, long dated, Q's Pulse, long dated, Apple Pulse, long dated.
Meta looks good.
Zero DTE, calls.
If you're thinking about earnings for Amazon or Apple, I would sell 15 deltas. Just me personally. 20 deltas have been getting hit too many times on 20 deltas, having to manage the positions. If you can get enough premium, I would go out maybe a couple of weeks, sell even 10 deltas if you can. They should be pretty decent premium. Apple or Amazon or both. I'd sell maybe 10 if I can get that. Let me see what the 10 deltas are going for. 2 weeks out on Apple. Let's see what they looks like here. Apple.
AMD Pulse, long dated.
Apple, 2 weeks out. No, I'm gonna go to the 7th. Let me see what the 7th looks like. A week is fine. You can always manage a position with a week to go.
AMD Pulse, long dated, deep.
I don't know, maybe go out a month. Go out a month, maybe. Apple, let me see what a month looks like. Okay, we're NVIDIA, we're at the high of the day, pulling back our little bounce there. Okay.
Zero DTE, calls.
Let's see. 36 day, September monthlies will be 50 days. That's fine. 50 days is fine. Apple. 375s.
Bring it on.
375 for September 18th. 375s are a 14 delta, $2.30.
Soft Pulse,
Yeah, it's only $60. It's no 6. Yeah, it's only like $60. I'd probably do 370, 17 delta,
NVIDIA Pulse,
$3. So you get $1.25. $1.25 doing the 370s for September.
long dated,
Calls, the chooser. What are you selling? You selling 17s or higher? 14 deltas, 11 deltas. 11 delta would be the 380s.
Submit your questions for our team to answer live on air, bloomberg.com/ask.
Amazon, let's see what Amazon looks like. Amazon.
Ask your questions. We had a great round yesterday with Ludlow and Deep, and we're covering.
Amazon, I'd probably go out to September as well. Amazon. Let me just see what is sell an iron condor on Amazon.
Sending me your IDs, you know who you are.
Okay, how much time do we have? We got 4 minutes left. Not much time left. Amazon. 260 call. 260.
Yeah, whatever you want.
265.
Having said that, we're on a day when I feel like all of a sudden investors are saying, okay, there is more.
260, 265.
Microsoft certainly showed that. And so investors have definitely wanted, I mean, the move up in the markets.
And put side, I'd go put side. I think we said what would 200 go for? 200?
Talk about it.
I order everything off of Amazon now. I can't imagine Amazon's gonna miss.
Exchanged airstrikes, Washington hit dozens of Iranian military targets.
That's $1.85.
So keep an eye on
Amazon.
it. It's not really on the radar.
Let's see. 260 is what? 260 is, ooh, that's a 30 delta. 260 is a 30 delta. No wonder 22 delta be 270. 270, 275.
Still a situation.
270, 275. Not much time left. 270, 275. 2 minutes, 40 seconds. 270, 275. 270 is a 22 delta. That's as close as I would go. The 200s are what? 200s are a 13 delta. So you could do 205s. 205s. I don't know if they have enough time. 205. 200. Okay.
Yeah, and to be fair, markets react. Market reacts to us.
Okay, it's $1.66. Amazon. Amazon. Not much time.
What the read is on something, whether it's kind of a one-day thing versus something longer, more substantial. So, yeah, it's something we've still been on our radar. We're heading into another weekend, and we'll see what happens. We're almost into another weekend. We'll get into these earnings. You know, it's interesting too. We'll have guests on our investors.
Okay, 270, 275 for September. 205, 200 put. 270, 275. Those are 20 delta on the top and 17 delta on the bottom. For $1.61 credit. $5 wide. All right, so that's it for me, folks. I got a hard stop at 4 o'clock. Hard stop at 4 o'clock. I'm going to start shutting things down here. Have a great weekend. Have a great weekend.
Your Apple shares higher by, lower by 1.2%, and this year higher by 0.2%.
Microsoft turning down. I could sell some. I could take Microsoft off. I'm looking for at least 50% on Microsoft.
The closing bell, Bloomberg's comprehensive cross-platform coverage of the U.S. marketplace starts right now.
All right, folks. 30 seconds to go. There goes Meta. Meta ripping here. Meta going. Okay, Meta ripping. I'm out of here, folks. Have a good one. Take care. We'll see you. See you on Monday.
In terms of what we've seen.
All right, I'm out of here. Okay, nice day. Nice day. What a nice day. Okay.
And the names in there, they're AMD,